Hi, my name is Bob Iaccino. After 12 years developing a system which last year generated a 73.3% win rate and beat the S&P 500 by 254%, I've decided to share my story. I urge you to keep watching because I believe 2021 will be a crucial year for all of us. Rewind about 20 some odd years. I woke up that morning with a terrible headache. The pain was absolutely unbearable. And while I was on the verge of one of the biggest years of my trading career, there was just no way to focus through that kind of pain. I remember how my wife whispering in my ear, "Do you want to go to the hospital?" felt like a sledgehammer to the side of my head. A few hours later, after vomiting from pain, my wife rushed me to the hospital. A long afternoon of painful tests later, and nothing. Nobody could tell me what was wrong. They pumped my body with painkillers, scheduled an MRI, and sent me home. Fast forward to Easter weekend. My wife and I would drive to my mother's house to spend the day with her and my father. I woke up that morning and I couldn't see out of my left eye. It wasn't dark, but more as if someone placed like a white sheet of paper over the left side of my face. I kept it to myself, thinking it would just clear up. I was wrong. I knew the situation was far too serious for me to continue hiding it from my wife. Once I told her, she forced me to pull over and drove me to the nearest hospital. Just like last time, test after test showed nothing. This time, though, they immediately sent me to get an MRI. And the following morning, my doctor said the scariest 5 words you'll ever hear. You have a brain tumor. It's very difficult to describe what you feel and what you go through when you hear those words. For me, the typical thoughts of family and friends and how much time I might have left flooded into my brain. But something else hit me as well. Work. My trading career had been moving along in big ways. From my early days on the CME, Chicago Mercantile Exchange trading floor, for working for Japan's 3rd largest brokerage house, to a new role at Smith Barney, who had just bought the brokerage house. My success to that point hinged on one thing, my brain. As you can probably imagine, it felt uniquely cruel that the thing I relied on the most was now literally in a position of killing me. I didn't know it at the time, but it was a blessing in disguise. I'm not going to bore you with the details now, but the important thing to know is the brain tumor devastated my pituitary gland. The pituitary gland is no larger than a pea, and it's often referred to as the master gland of the human body. One of its functions is to control what's known as the stress response. Harvard Medical School puts it this way: as the initial surge of epinephrine subsides, the hypothalamus activates the second component of the stress response system, known as the HPA axis. This network consists of the hypothalamus, the pituitary gland, and the adrenal glands. There's a very complicated neurobiological response your body goes through when confronted with fear or stress. In fact, this process literally alters how you behave. It's this process which makes some people freeze in the face of danger or jump into action. So what does that mean? Well, in a very real way, I have no physical sense of fear or stress. In other words, the biological changes which alter how you think and process information under stress no longer happen to me. Let's say you've been afraid of heights your entire life. Now imagine waking up one morning and being able to stand on the top of the Empire State Building without a care in the world. How would your behavior change from that point forward? What would you do knowing you wouldn't physically feel extreme stress or fear? Well, that's precisely what happened to me. Now, intellectually, I know if I'm in danger or not. But unlike most people, my body doesn't trigger the stress response when faced with stressful situations or emotions. What does this have to do with trading in the stock market? Well, if you're in the stock market, you fall into one of 2 groups. You either give in to your emotions and follow the crowd, or you ignore the crowd and gain from others' fears. Everyone likes to think they're rational and dispassionate when it comes to trading. You've likely heard the advice of not getting emotional when it comes to trading. Whether by coincidence or not, my trading and investing success skyrocketed after my ordeal. And due to my own natural curiosity, I needed to find out why. I came across an interesting study out of MIT, which found a clear link between emotions and trading performance. The more intense the emotions, the worse the performance. And there's more. According to a popular trading platform, 80% of traders lose money in just 1 year, and the median loss is 36.3%. Here's another troubling fact. A North American Securities Administration Association survey concluded 70% of traders will lose nearly all of their money. You've likely heard legendary investor Warren Buffett once say, "Be fearful when others are greedy, and greedy when others are fearful." That's great advice, but most people can't do that. And in fact, it's not even your fault. Most people simply can't control the stress response and the biological chain of events which occur. The fact is, this neurobiological response happens automatically, and it alters the way you think. In most cases, this is a good thing. It's your natural fight or flight response. But when it comes to trading, it's completely harmful. Which is why over the last 28 years, I've been developing a system which removes the emotion on your part. Not only have I seen with my own eyes the danger of being too emotional with the markets, I've also experienced how much more successful I've been since my tumor. I began fully running this system with real subscribers back in March of 2020, and here's a quick snapshot of the results. Plus 18.97 in March, plus 4.51 in April, plus 3.98% in May, plus 3.81% in June, minus 3.4% in July, but plus 10.86% in August, minus 2.72 in September, and then again, plus 4.30 in October. Add to that, plus 7.15% in November and plus 4.19% in December. That's a cumulative return of 62.79%, which is 254% higher than the SPY, which is the most actively traded ETF that tracks the S&P 500 index. Keep in mind, I'm not talking about theoretical backtesting like some people try to pass off as real results. These are the real published alerts and the results from the system. As you can see, we had 2 losing months, but the losses are small compared to the wins. That's how the system is designed to work. See, even though we have an over 70% win rate, the reality is all trading systems have some level of risk, and all systems generate losers. However, taking this emotionless approach, we've been able to keep the losses to a minimum. Even more important, I'll explain in just a minute how using this system will be even more important in the year 2021. This approach could transform your trading results and lead to life-changing results. And by results, I mean a greater than 70% win rate and beating the overall market by 2.5 times in 2020 alone. As I mentioned earlier, I started my career in 1992 as a phone clerk on the CME trading floor. I wasn't very good at it. I struggled in the early years, and I was a horrible trader when I first started. But then I started to gain confidence as I began to understand the markets better. Then in 1996, my brain tumor changed everything. It gave me, honestly, an unfair advantage because I was finally able to remove emotions from trading. For me, this was very much literal. Over the next decade, my career completely transformed. I went from the Chicago trading pits to some of the biggest banks and brokerage firms in the world. I worked at Smith Barney and at Germany's Commerzbank. I ran my own commodity pool at a Chicago-based trading firm. I was a principal and a member of the investment committee for a very successful hedge fund of funds. And the list goes on and on. I've also done over 2,000 interviews dealing with the markets, where you may have seen me on CNBC, Bloomberg, Fox Business, Yahoo Finance, TD Ameritrade, and so on. Through all of this, I discovered a very simple truth. Trading is hard, and anyone who tells you otherwise is being less than truthful. It can be an expensive roller coaster ride of emotions. When you're on a winning streak, you feel like you're on top of the world, but then you make a few bad decisions and it's all gone. Months of hard work and profits gone, sometimes in just one day. I'm sure you've been there. It turns your stomach. You feel dumb, like a failure. Maybe your position was too big. Maybe you didn't cut your losses. Maybe you just held on and hoped the market would turn around. The bottom line is your emotions got in the way. It happens to everyone. Trading can be nerve-wracking, and sometimes it can get even worse. Take 2001, for example. At the time, I was running a trading desk for Commerzbank Futures. Back then, it was the third largest German bank in the world. The day started off as usual. I was on the CME trading floor with other traders, Peter Ori on my left, Paula on my right, when suddenly the phones lit up like a Christmas tree. Call after call came in, rapid fire, just one right after the other. The pit erupted into an almost deafening roar. This was something I was used to. Anytime a piece of news would happen, hit the wires, or the Fed would make an announcement, we'd get what I could only describe as pure pandemonium. I did what I normally did. I checked our positions and our clients' positions to make sure we weren't overexposed to whatever was causing this roar, then waited for it to die down. This time, though, it didn't die down. This wasn't typical. I looked up at the giant jumbotron on the trading floor and immediately knew this would not be my typical day. A hijacked plane smashed into the World Trade Center. It was September 11th. Then 15 minutes later, another plane crashed. About 45 minutes later, an announcement blasts through the PA system on the trading floor. The United States is under attack. We're told to evacuate, but the desk I was running had a large number of trades still open. I asked anyone with kids to leave and go home to their families. For everyone else, I let them know it was up to them to stay with me as we closed out these trades. But no matter what, I'd be the last one to go. As hard to believe as this may be, I wasn't afraid. I wasn't freaking out. I was very calm. And for the first time, but not for the last time, I remember thinking, thank God I had that brain tumor. I knew the gravity of the situation, but like I said before, I don't exactly feel the fear or stress, which is why I continued to manage the trades. And the last thing I did was to close a trade that I had opened that morning, which I wasn't supposed to do. You see, the rules of that particular system said we were supposed to hold that trade for 2 business days. But this was an unprecedented event in history, and I knew that the best thing to do when you have no data to go on was to eliminate the risk. Guess what? Turns out that trade was a huge winner, and my clients made more than 10 times the money they were supposed to make on that trade. I knew the trading floor was going to be shut down for 4 days, and we had no idea what was going to happen or when it was going to reopen. Doomsday thoughts ran through everyone's mind. Will there be a full-fledged invasion? Are we safe? Will the markets crash? Nobody knew. I learned a few things that day. First, news stories and unexpected events shock and scare people. It doesn't even have to be as big as a terror attack. The fact is, most people go into fight or flight mode quickly and easily. Second, I learned anything can happen at any time, even the impossible. Before 9/11, the general public was completely oblivious to the possibility of a terror attack of this scope on our soil. What's worse is, no one can accurately predict an event like this. So what do you do if you can't predict these events? How can you safely navigate the market without big losses? Despite all the craziness in the world, in the news, and in politics, how can you consistently beat the market without great stress, without typical hesitation, without constantly watching the market and living tick by tick? Is it even possible? Academic studies going back decades prove time and time again, active traders who watch the market tick by tick have a hard time making money. In fact, the opposite is generally true. They lose money, and over time, they tend to lose all their money. The evidence also shows following the crowd is a bad idea. A recent study makes the point obvious. It examined Robinhood traders from May 2018 until August 2020. It looked at events where traders crowded into specific stocks. The most recent example of this is the craziness around GameStop, ticker GME. What they found is prices usually spike, then reverse. Usually the reversals are extremely painful, and in the case of the Robinhood study, the reversals actually became negative returns. We don't chase things like GME because, number one, I don't really feel the great FOMO that other people do, thanks to my tumor. I know the value of sticking to the process, but also because we were around for pets.com in the crash of 1999-2000, we remember what the aftermath of these frenzies look like. Another study tracked 1,600 Brazilian day traders for a year and found that 97% of them lost money. 97%. In fact, Only 1% of them earn more than the Brazilian minimum wage. There's more. A study in Taiwan used complete transaction data for the entire Taiwan stock market over a 15-year period. Their conclusion? Less than 1% of the day trading population is able to reliably make money trading. And don't think for a second that applies to the amateurs only. Academic studies overwhelmingly prove professional money managers underperform their benchmarks over a multi-year period. In fact, a staggering 85% of professionals fail to outperform. I could keep going, but you get the idea. Making money in the markets is hard, but it's not impossible. I've spent decades in this business, and I've had only 3 down years. Now, how did someone like me, the son of Italian immigrants from the west side of Chicago, succeed for so long while the vast majority of traders failed? For me, the answer is obvious. You need a system, a process. A trading system that can consistently beat the market, take emotions out of trading, and can survive the ups and downs of the news cycle and irrelevant events. I look for this type of system everywhere, but they're not just sitting on shelves at Target. What I was looking for wasn't available to regular people like you and me. Sure, Wall Street and big hedge funds have these tools, but not us. While I was at Smith Barney or Nico Securities and Commerzbank Futures, I had access to the best tools in the world, the best software money could buy, the types of systems you couldn't possibly imagine, but they were no longer available to me when I went off on my own. Have you ever felt like you just can't win? Well, you're 100% right. You can't win. And someone else who's much richer, much more connected, and much more powerful is winning day after day while the rest of us struggle and lose money. And the fact is, the playing field simply isn't level, not by a long shot. But that didn't stop me. It actually motivated me. I became obsessed, so I started building my system, and I did pretty well. But I couldn't do it all on my own. I needed help, and the help I needed was lurking inside the very hedge funds that I was looking to beat. After 8 years of relentless work on this emotionless system, I met a very special human being. Let's just call him Oz, the man behind the curtain. He went to Northwestern University, received a master's in electrical engineering, he's a math whiz, and he's an insomniac. During one of those sleepless nights, he created and patented a technology that helps to power red light traffic cameras. I hope that doesn't make you hate him. Later, I would learn he was the man who hedge funds actually hired to break their systems, literally. We met after Oz bought one of my courses and showed up at my live event at the University of Illinois. With around 100 people in the room from all over the country, he comes up to me just before lunch and says, "Hey, my name is Oz. I bought your course and it's great, but I can make it better. Would you like to know how?" Now, a lot of people in my position would have likely ignored him. But not me, though. After the last session, I met up with him again to see how he could improve what I had developed. And sure enough, he actually did exactly that. The changes he made are technical, so I won't bore you. But I knew I had to partner up with him. I knew we'd develop the type of system I was after. What I didn't know back then was that was the start of what I now call the 10-stock system. My brain tumor, my 9/11 experience, meeting Oz. These events were random and unrelated, but all of them were needed to create the type of system I knew people like you and I needed. And remember, the criterion is simple. The system must consistently beat the market, take emotions out of trading, and survive the ups and downs of the news cycle and irrelevant events. Let's take that first point. The system must consistently beat the market. Take a look at the 2020 track record. I started sending alerts in March 2020, and we did as follows. Remember earlier when I told you we had 2 months last year showing losses? Well, the system is designed to be emotionless, so these losses didn't hurt us, not one bit. In fact, as you can see from the chart above, we beat the S&P by an astounding 254%. But what does that mean in real life with real money? Let's say you have a $25,000 portfolio. How does the 10-stock system compare with some of the other things you could have done in 2020? The first option is trading it on your own with no help. Could you have gotten lucky? Definitely. But study after study shows the more likely scenario is you would have taken on massive losses. In most cases, you would have lost it all trying to trade. And remember, that's not me saying it. It's MIT, popular platforms like Robinhood, even the North American Securities Administration Association saying it. In fact, according to the NASAA, there's a 70% chance you would have lost nearly all of your money. So please, even if you decide not to use my proprietary 10-stock system, do not go it alone. The risk is far too great. Now let's say you decided to put it in an S&P index fund like the SPY. You would have made $4,425, or 17.7%. And that's not bad. But had you used my 10-stock system, you would have made $15,698, or 62.8%. That's 254% more than the S&P, a 2.5 times return versus the S&P. Remember, it's the same $25,000 portfolio, but the difference in the gains is significant. And get this, you actually take on less risk using the 10-stock system than putting it into an index fund. Take January of 2021, for example. The 10-stock system returned 5.96%, while the S&P, after making new all-time highs, turned around and fell to finish the month down 1.5%. This is because we took profits all month long and had very little exposure to the downturn when it came. And they always come. And then we have the last option, which is do nothing. To me, this is probably the worst category. It gives you the illusion you're playing it safe, but you're not. The problem with the do nothing crowd is they think they're protected, but they are not. Why? Because their purchasing power is declining. In fact, it's getting obliterated. Take a look at the U.S. money supply chart. The amount of dollars in checking accounts in the banking system exploded in 2020. It increased at the fastest rate in history. Now zoom in on November 2020. Do you see the jump of more than 1 trillion? That means inflation is around the corner. Frankly, it's already here and you just don't know it yet. See, the government tells you inflation is only about 1 to 2%. That's because the government's metrics for calculating real-world inflation are at best outdated, at worst a complete fraud. I can't believe I'm about to say this because I love this country. My father came here as a legal immigrant with a green card and became a citizen, worked hard, joined the middle class. I still believe it's the greatest country on earth and I consider myself a patriot. But the way our government portrays the level of inflation to the people reminds me of how deceitful China is with its people. So if you're in the do nothing crowd, you're in a really bad spot. You think you're saving your money, but you're not. You're letting it sit in a bank account and it's wasting away at an alarming rate. You could no longer stand on the sidelines. You have to act now because this situation is only going to get worse. Let me tell you what the 10-stock system is. The core portfolio never has more than 10 stocks. And with every alert, you get the entry points, price targets, and stop losses, and any adjustments we're recommending on any open trades. In other words, each trade has a defined risk. Why? Because this hits on the second point of the perfect system. The system must take emotions out of trading. Let me show you some recent examples. Take a look at Intel. In this example, we took our profits before the drop. We made 11%, while others might have lost over 20% if they held through the price drop. And we know by studying trader psychology, that's exactly what most people do. This is one of the major benefits of the 10-stock system. By following it, you take profits constantly and consistently. While other people could be down 50% in a crash, we could be up 30% because we limited the risk ahead of time and get out while everyone else keeps piling on losses. Another strategy we use to manage our losses is timing based on price action and stop loss adjustment. We get in and out of the trades within weeks, and we raise our stop losses when needed to protect capital. In a moment, you'll see why this is so powerful. That way, when we hit our profit targets, we get out and move on to the next trade. We don't look back and wonder if we could have made more because it's irrelevant and counterproductive. Remember, the key is to remove emotion, not give into it. The reverse is also true. If the stop loss gets hit, we don't watch to see if price recovers. We simply move on. Losses are part of the game. You should always expect them because it simply doesn't matter. As you saw from the chart earlier, Our system gave us 2 losing months, and yet we beat the S&P by 254%. If you want to play this game, you will win and you will lose. And my job is for you to win more often than you lose. My system is designed to win roughly 70% of the time. The key is precise methodology combined with appropriate risk management. And based on our performance in 2020, I know this approach works extremely well. Something else to consider is that we generally look at over 4,000 stocks. And then we narrow it down through our proprietary process to about 100 to 200. And ultimately, we pick the best ones. This allows us to focus on the most profitable trades the market has to offer without wasting time with the losers. And since our hold times tend to be short, we're able to profit over and over again in a short period of time. Take a look at another trade we did in INTC, Intel, as an example. On March 18th, we got in at $45.50. We were out at $53.14 on March 24th, less than a week later. Intel kept going higher, but we do not care because we took our cash and allocated it to something else that was moving. Earlier, I talked about the timing strategy we use with the 10 stock system. Let me show you how powerful this is. Most people use a buy and hold strategy as a way of removing emotion from the equation. In theory, this makes sense, but in practice, it can actually be detrimental. Let's use these Intel trades as an example. As you saw, we traded Intel multiple times last year. But let's say that instead of trading using the 10 stock system's timing and stop loss strategies, you bought on January 1st and sold on December 31st. You'd be sitting on a 17.3% loss. Compare that to what the 10 stock system did with the Intel stock. Remember, this is the same company, Intel, as well as the same period of time. However, instead of buying and holding, we use the 10 stock system, and what you actually achieve is this. By simply following the system, you could have made a gain of 11.3%. But here's the kicker. Imagine we did this with multiple names over a full 12 months and annualize that 11.3% gain, and it becomes a 68% gain. In other words, we took what would have been a 17.3% loss and turned it into an annualized 68% gain. Can you see the power of combining this system of emotionless trading with timing and strategic stop losses? Let's look at another example, this time in Prudential. Take a look. We were in at $42.50 on March 18th and out at $54 on March 25th. Again, in a week for a quick 27.1% gain. Think about what that means. The only time your money can grow is when it's in the market. But the only time your hard-earned money is at risk is also when it's in the market. If you can pull a 27.1% gain out of the market in a week, that's an annualized return of 1,411%. But it gets even better. Had you gone with a buy and hold strategy, like in the Intel example, you would have had a loss of 17%, as shown here in this chart. Compare that to the 10 stock system, where we traded in and out of Prudential twice last year with an average hold time of 75 days. And you get a whopping 142% annualized return. Simply taking profits and limiting losses, we took what would have been a 17% loss and turned it into a 142% annualized return. Of course, not every trade will be held for such a short period of time. Sometimes we'll see a trade where it makes sense to stay in a bit longer, more like a month or even more. Have a look at AMD, Advanced Micro Devices. We entered at $85 on November 20th and exited less than a month later on December 15th at $96.85 for a quick 13.9% gain. If you can pull a 13.9% gain out of the market in less than a month, that's an annualized return of 203%. Are you starting to see why the 10 stock system is able to beat the S&P and hand you hedge fund-like gains without having to constantly watch the markets? In the case of AMD, had you gone with a buy and hold approach, you would have done quite well. The total gain would have been an annualized return of 95%. We can all agree that's a great return, but using the 10 stock system, you would have more than doubled that gain. And what's even more impressive is all of this is done automatically for you without you having to think about it. Now take a look at Cisco. We got in on April 6th at $41.50 and got out a month later on May 5th at $40.95. As you can see, this was a loss of 1.3%. The momentum faltered and we continued to adjust our stop loss until we got stopped out for a small loss. And again, that's the beauty of the 10 stock system. We protect our downside. If we're up on a trade, we adjust our stop loss. We don't sit and watch our profits disappear. But then take a look at the very next trade, ARNA, Arena Pharmaceuticals. We entered at $51.25 on May 5th and exited on May 21st at $58, which handed us a 13.2% gain. On this trade, let's say you would have gone the buy and hold approach. Again, if you bought on January 1st and sold on December 31st, you would have achieved an impressive gain of 67.3%. Not bad at all. However, using the 10 stock system's timing and stop loss approach, we generated a 13.2% gain in less than 3 weeks. Annualized, that's a 300% gain. Another example we have from the system is EYE, National Vision Holdings. We entered at $31.50 on July 24th and exited on August 7th at $36.50 for a 15.9% gain. Had you bought EYE on January 1st and sold it on December 31st, you would have had a nice gain of 38.2%. Again, that's not bad at all. Following the 10 stock system though, we achieved a 15.9% gain in 2 weeks. That's an annualized 241% return. These are all real stocks traded with real money by our small group of members. And these are all real results. And since the goal is to be consistent over time and not take on more risk than necessary, the gains tend to be smaller. This is something I really need to stress. If these consistent winners week after week, month after month, and year after year bore you, then this is not for you. I need to state clearly, I'm not going to hand you the next GameStop. I have no interest in that type of trading. It's short-lived, irrational, nonsensical speculation, and that simply isn't what I do. Sure, it's fun when it's all going well, but eventually that crazy game of musical chairs come to an end. The music stops, as it always does, and the reversals are some of the most painful things I've seen. I've seen this movie before, and it's a horror story for most. Personally, I do think a small, very small portion of your capital should be in speculative trades, but that's not what most people do. What my 10 stock system does is simple. It wins consistently and with well-managed downside risk. The one drawback, if you can even call it that, is the individual stock gains are smaller. However, they add up to very big wins over time, as shown by the fact that the 10 stock system outperformed the S&P 500 by 254% last year. You may not know this, but the US stock market ended 2020 on all-time highs. Despite the pandemic, despite the shaky start to the year, it broke the prior all-time high record. Remember that study I mentioned earlier? Over 85% of professional money managers rarely outperform their benchmarks. What that means is the pros didn't beat the market. At the very best, barely kept up with it. The 10 stock system outperformed the market by a huge margin of 254%. Like I said before, if consistent wins just isn't for you, I hope you get some value out of what I've shared with you here, but we're not a good fit. However, if you understand massive home runs based on irrational speculation is extremely dangerous to your financial health and well-being, if you can see the value of consistently winning on your trades all year long, then continue to watch. Inside the 10 stock system, you'll get 2 to 8 trade alerts per month. The reason for the high level of activity is what I mentioned before. The wins are smaller, but we're increasing the timing of trades for bigger gains, which is why you get those 2 to 8 alerts per month. If you recall, my brain tumor destroyed my pituitary gland, and because of it, I have no physical reaction to stress or fear. I knew from that experience I needed to develop a system that mimics those same feelings for you. Now, I can't do anything, obviously, about your body's natural response to stress, and I certainly would never wish a brain tumor on anyone. But I came up with an ingenious way to experience little to no stress when following the trade alerts that I send you. How's that even possible? All the alerts are sent out at night. You don't have to watch the markets tick by tick wondering if you've made the right decision, and you won't be distracted by intraday craziness. Right before bedtime, which incidentally is the time when the least amount of stress hormones are in your body, you'll review the alert I've sent you, punch in a few numbers, enter your trade, and then when you sleep, with a peace of mind knowing your entire trade, position size, risk exposure, target, profit, etc., is already set. The only thing you have to do before the market opens is make sure you're not getting in below the stop price that we sent you in the alert. That's it. If there's anyone who knows the huge advantage you get by removing stress and emotions from trading, it's me. It's this edge that's given me a winning track record for at least 8 of the last 10 years. That's why the financial news shows always call me for interviews and feedback on the markets. Even as recently as August 21st, 2020, right in the middle of a pandemic, who did Yahoo News call? I truly believe sending you the alerts this way is how you win over and over again, by setting up the trade, the entire trade, before you go to sleep, and only checking it once in the morning, which allows you to go about your day without thinking or worrying about what the stock market is doing. Remember, the way I have you structure the trade, you'll know exactly when to get in and when to get out. Profits will be taken automatically. No need to stare at your screen all day long and run the chance of being emotional and having that get in the way. The downside risk is covered. You'll know ahead of time what your risk is. The upside profit potential is also covered. You won't have to wonder when to sell and take profits. Again, all of this is done automatically the night before when you follow the alert I'll send you. So in the evening, around 7 p.m. Eastern Time, you'll get an email which looks like this. Quick and easy. I'll tell you exactly what you need to do, and you'll have plenty of time to act. From the comfort of your own home, and in fact, so simple, you can even do it all on your phone. No need to even fire up your computer. Just a few clicks to enter the number of shares and your entry price, your profit target, and then let the market work for you. Remember, our profit targets are automatic. So when the profit target gets triggered, money is automatically deposited into your account. You don't do a thing. Imagine waking up with $5,000 in profits or even $10,000 and realizing you didn't have to be glued to your computer screen. You didn't have to experience the roller coaster madness of the markets. You did this without letting your stress and emotion get in the way. Another thing to keep in mind is that you'll always hear from me. Even if there's no changes to the portfolio on a given day, I'll still email you and let you know nothing's changing. This is white glove service, and I'll hold your hand every step of the way. And if you have any questions, if something doesn't make sense, ask me. I'll host a Q&A session to answer your questions about the service. Also, once a month, I'll give you my thoughts on the market and the economy. It's a quick read that will keep you informed. I also cover topics you might not read about in the Wall Street Journal or hear about in the mainstream financial media. I'm not going to sugarcoat anything. I'll tell you the truth. On top of that, you'll receive a portfolio update video from me every 2 weeks. I'm not the prettiest face on the planet, but every 2 weeks, I'll show up in your email looking like this. The most recent topics in my video have been the GameStop frenzy, as well as stimulus and that's effects on the markets. And finally, once per quarter, I'll review our performance. I'll look at our winners and our losers and summarize how we did compared to the S&P. As you might imagine, this type of service isn't cheap. Price is fair, it's certainly not cheap. The value of a lifetime subscription is about $10,000. The cost for a 1-year membership is $3,000. Like I said, it's not cheap, but it's fair. As I mentioned earlier, if you used a $25,000 portfolio and followed our alerts for 2020, the 10 stock system could have made you $15,698. So really, you shouldn't overthink this. Here's why. The moment you become a member of the 10 stock system, you get access to a suite of life-changing, money-making resources and benefits. And that's no exaggeration, as we've seen here today from members like our current member, Alan. Hi, Bob. Closed my 50th trade today since being a member since March 23rd, 2020. Closed realized profits, $27,911.20. Average $3,488.90 per month. Appreciate all your efforts and mentorship. Alan. The 10 stock system members receive access to my entire portfolio of alerts with detailed buy up to prices, entry and exit prices. In the past, subscribers who followed these alerts have seen gains as high as 27.1%, 23.3%, 19.4%. That's enough to pay for the service. Remember, one of my biggest benefits of my 10 stock system of alerts is you get to take gains over and over. It allows you to take thousands of dollars and large percentage gains off the table and not worry about whether the value of your portfolio fluctuates. And don't forget the video updates I send out every 2 weeks. I never hide from you. I'm just not wired that way. I'll give you the good, the bad, and the ugly on the markets. If the system is signaling for us to back off, that's exactly what we'll do, and I'll tell you about it. Now, as the newest member of the 10 stock system, you'll be lined up to profit immediately. The first thing you'll get your hands on is my position size calculator training video, where we dive deep into one of the most important areas of trading. The topic can be quite boring, but if you've ever asked yourself how much or how little of a particular stock to buy, or if you're wondering what to do with the 2 to 8 alerts that you get from the 10 stock system, this is a video you'll want to watch. Truth is, at $3,000 a year, the 10 stock system is a steal. And while I don't know how long I'll keep the membership open, I can tell you I'm already planning the next price increase because frankly, $3,000 is simply too good. But today, you won't pay anywhere near that. And that's for 2 very important reasons. First, because you watched this far, I know you're serious about finally being one of those people who knows exactly what to do amid all the Wall Street craziness that scares the hell out of everyone else without the dangerous ups and downs most traders go through. For this reason, I want to make it a complete no-brainer for you to join and take advantage of all the emotionless trading. And second, because this is the first time I've officially opened up the 10 stock system to a large group of new subscribers. Aside from the small circle of subscribers who have been profiting handsomely, this is the first time I've opened up access. For those 2 reasons, I'm going to offer you an incredible deal. I'm going to slash half off the yearly new membership fee. Instead of $3,000 for a very short time, you'll get a full year for half off. That's just $1,500. So today, you get access to hedge fund quality research, which allows you to profit without letting stress and emotions derail you. In other words, today only, and for a very short period of time, you'll get recommendations, guidance, and research into this market for around $28 per week. You see why I told you earlier not to overthink this, not to procrastinate? All you have to do is skip 1 night out at a restaurant per month, and that's enough to get you in front of these nightly alerts that can lead to very nice profits. Of course, not every trade is a winner, but with a 70% win rate, you'll have what I call profit windows more often than not. And those profit windows add up to very big gains, life-changing gains where you potentially never have to worry about money again. You can add those restaurant visits back in and more. So when you become the newest member of the 10 stock system right now, you'll get to join for just $1,500 per year, a 50% discount. You get it for half off the regular price, which comes to a measly $28 a week. You should see an order button below this screen now. You'll be taken to a secure membership enrollment form where you can review the details of your offer and make sure it's the right offer for you. You get all the membership benefits discussed here, instant access to the position calculator training video, the core portfolio, nightly alerts with full instructions, video updates every 2 weeks, and detailed portfolio performance tracking. You'll get all of this for just $1,500, which is just $28 a week. Plus another bonus. If you sign up today, I will send you an additional set of trades. I call them high beta trades. These are often faster moving and can include currency and commodity ETFs that don't make it to our initial screen, but still not only have the opportunity to provide you with extra profit, but can move faster and often farther than our core trades. They are riskier, but because we control risk and still use responsible position sizing, they can be a powerful addition to any portfolio. Last year, our high beta trades had a slightly lower winning percentage, but a higher reward to risk and shorter hold times than our core portfolio did, resulting in higher annualized returns. High beta trades made a full 24% more profit on average per trade than the core trades did. These can really move. Remember, if you want a full breakdown, you can click on the button now. This is a very time-sensitive offer being made to you. And I can tell you, you may not see the 10-stock system again, ever. Don't put this off. Don't procrastinate. At just $28 a week for a short time only, this is truly a no-brainer. Thank you.
And good morning, everybody. Thrilled to be with you. Price Headley here of BigTrends.com. I want to focus you. I do a lot with option trading, but I've kind of come full circle here in recent times to do a lot with stock trading too. And I want to share with you how you can find stocks that can double in the coming weeks. Sometimes these moves that I'm going to teach you about today can happen in days, but we tend to expect them to take multiple weeks or sometimes even a couple of months where they can double, triple, or even better. So we're going to focus you on that today. Just a reminder that everything I share with you today is for your information and education only. Nothing we talk about here should be considered a specific recommendation to buy or sell any particular investment. Of course, you know that you are 100% responsible for your own investment decisions. Big Trends and its staff are not responsible for any trades you choose to make. And not all Big Trends products and services are appropriate for all investors. Big Trends does not provide any personalized financial, tax, or legal advice to any individual. What we do instead is we send out our updates for our stock doublers, new buys and new exits at 6 p.m. Wall Street time after the market closed. You don't have to screen watch, but you know what to do for the next morning's opening. Consult your tax advisor on any investment that's going to impact your tax situation. So why am I so interested in trading stocks, not just options? Because a lot of these stocks, frankly, I'm going to teach you about in my stock doublers portfolio, move like options. They move very fast. Every trade has risk, so we're going to talk about how we manage risk too. But a big part of this too is that, we're going to talk about why stocks have become such a attractive approach for active investors. You don't have to be day trading. You don't have to be in front of a screen all day, but just focusing on the stocks that are really heating up on the institutional radars. So I've got my radar set to find these high growth stock doubler candidates and really set it up to make trading fit your schedule. So you don't have to worry about missing out intraday, but you can check it that night or even before the market opens the next morning. And I've got loads of doublers case studies in here on how you can model this successful pattern. And if you don't know about me, I've been trading for over 30 years. I started trading in 1990, fresh out of graduating from Duke University, and then launched my company Big Trends back in 1999. But I talked to a lot of traders and investors about some of their common challenges, that the biggest challenging things that they're focusing on, including spending too much time searching for their trades. So ask how many of these fit you. Do you spend too much time looking at possible trades, not sure what to do, wondering, frankly, do you have the confidence in your method? Is your edge strong enough? Do you know when to get out? It's so easy to get in, but do you know exactly what your rules are when you should exit a trade? Do you sometimes get too heavy on some ideas and then not take other ideas you should be taking, or not take them big enough that we call that position sizing. You're not consistent on your position sizing. That will make for a more volatile experience. Unrealistic expectations. Maybe you thought a stock's going to be the next 10 bagger and then you're stuck holding a dog far too long, or just being overreactive to news and market noise. So my goal is how you can literally snap your fingers, make these obstacles disappear, and make things really clean and crisp in terms of what your strategy is. So first of all, why am I such a fan of trading these individual stocks now more than ever? The biggest thing that's happened in my 30 plus years of stock and options trading is that commissions for stocks just about a couple years ago, summer of 2019, went to $0 when Schwab and TD Ameritrade had this price war, and took commissions down to nothing for stocks. So all of a sudden, you get to keep what you earn on a trade. You don't have to pay your broker for that. And you wonder, well, how does the broker get paid? They're getting paid on order flow and other things. So the bottom line is that your commissions have gone to zero. If you're paying anything in commissions for stocks, you need to switch brokers, okay? Because now you don't have to worry about that anymore. The other thing that happened really tied to the pandemic last year is that the index that everybody always said is so tough to beat, the index is actually not the best way to get stock market exposure, because it's become broken apart into different segments of the stay-at-home stocks and sectors, that when the pandemic hit, that those tech sectors, for example, became big winners. like Zoom and those type of names. But then the reopening sectors like hotels, casinos, airlines became a big problem. And so the index was getting sort of balanced out by both sectors that were winning and sectors that were losing. And if you know how to pick the right stocks, you've got a huge advantage. And so, like last year, the vaccine names really drove our portfolio to incredible heights. On top of the second half of the year, it was the EV names, the electric vehicle names. This year, it's been much more about energy. Energy has been the hottest sector, and we've been scoring on a lot of energy names in our stock doublers portfolio. The other aspect about stocks is that they can be easily traded and invested in a retirement account. So your traditional IRA retirement account, individual retirement accounts, what that stands for, you don't have to have your gains taxed until you take the money out decades later, potentially, if you take it out at all. So the idea is that you get to keep compounding that growth, and the compounding is so important because, of course, Warren Buffett calls it the eighth wonder of the world. You say, so how has our portfolio done since about the beginning of 2017? Here to just about a month ago, it's actually a little bit higher now, but as of a month ago, it's from $10,000 to $92,000, assuming no commissions, including all winners and losers. And so the whole idea of this is saying, you know what, if you could basically make a profit of 82 grand on a $10,000 starting account in just about four and a half years, that crushes the market. The S&P's done well through the pandemic. The Fed's poured the gas onto this market to try to make sure we came out of the pandemic okay. But the key is you still have to rotate into the best stocks. And so that's what I'm going to share with you today. So what's the origins of the stock doublers concept? I was reminded, I did a live seminar here back, we're now coming up on a couple decades ago, that I was doing this live seminar. I was talking about stocks that I was trading and options I was trading on those stocks. And one of the stocks was Taser. And I was doing really well with Taser. And a lady came up to me after and said she'd never traded that stock and never would because it was too far above its moving average. And I thought, isn't that an interesting belief that she has? And if you think about it, back up to this top half of this chart, everything that we trade and invest in, that you trade and invest in, and that I do, is based on your and my perceptions of where we think, is this a value, and is this stock going to be a lot higher or a lot lower based on its earnings, based on its product, based on its management, based on the sector. We all have these perceptions of where we think the opportunity is, but the reality is our perception is often biased by what we think we believe, by what we've read about, by what our experience has been previously. And so this kind lady said, you know what, that's just too extended. Well, you know what? Here's a chart going back to that era. This is actually still traded. Taser renamed themselves Axon. AXON is a symbol now. Formerly it was TASR for those who followed it back in the day. But this is going back to 2003. And I'm not going to spend a lot of time in the past, but I'm going to say we're going to look at more recent examples. But this is kind of the oranges of this concept. Before I even knew about this indicator I developed, this indicator on the bottom panel is the percentage above a key moving average. And this green line here is 100% above that average. I've got lots of moving averages I follow and can apply this to, but I've got one core one that when you come on board to our stock doublers program, you learn all my settings and rules in a dedicated kind of a training session, as well as a PDF that you get. But the key is when it crosses 100% above that average, you think that's just way overbought, right? You can see former Taser, now AXON, was trading near $1 per share when that happened, about $1. Okay, so at $1, you say, whoa, this stock has gone from maybe 20 cents to $1. And this kind of goes back to one of my mentors when I got started in trading and investing said, how does a stock go from 1 to 100? And I said, I don't know how. I like some of those. He said, it's got to go from 1 to 10 first. It's got to prove to you that it has the ability to move. Things that aren't moving, you should not be investing in, because let's face it, you and I as individual investors are not driving the market. It's the institutions who are driving the market. Like us, they want to be in stocks that have the potential to move a lot, and they're going to move a lot more money into those stocks if they see big growth potential. Obviously, Taser was at the time kind of fairly new. I remember actually going to Fox News and seeing the head of the company and his son come in these long black leather trench coats that look like the Matrix movie with Keanu Reeves. Basically, very kind of making the tour, if you will, of Wall Street. They were kind of the hip thing of the era because, of course, taser was used for law enforcement and a lot of other things. Uh, but bottom line is that that was probably their biggest growth market. The key is, you know what? At a buck, you'd think this looks way overbought. It's been at 20 cents. Now it's up fivefold. And yet it went from a buck to how high? $30. So that was a 30 bagger potentially from that first signal to where, of course, by the time it breaks down for me on this system, when it comes back under that 100% threshold, this is back at about $15, and you can see the short-term exit on it would have been around 13 on the final piece. That would have only been a 13 bagger. Still not bad for under a year's work, right? So I went back and I tested these patterns. And what I noticed is that the best stocks have a launch phase. So you have to get that first speed of movement. Think of a rocket or a space shuttle sitting there on the ground here with gravity holding that thing to the earth, and it takes a ton of fuel, a ton of power to launch them into that orbit phase. And then once they're in that orbit phase, they tend to coast higher. You've seen it where the rocket boosters peel off, and that the momentum of that rocket and space shuttle taking off is so fast and powerful that it can help it just get to orbit and keep coasting in orbit until it exits orbit. Once it exits orbit, watch out below. They can fall back to earth quickly, and these stocks can too. So you've got to be disciplined about when you see these patterns about how to get in, how to get out. So some recent examples now, one would be Microvision. This has been one of these meme stocks of the Wall Street Bets Reddit crowd. And so this one's one that we had made money on last year, and then we just came back to it here about a month ago and got a new buy signal across that 100% level off of this little breakout here at about $12. Now, we don't buy right there. We say it's got to prove it to us that it's going to go above that resistance. So the next day it closes above it here. Even though it's a red candle, those that follow candles know red candle means it's closing below where it opened on that given day. It is closing a bit higher. The close would be a little bit above that resistance line, if I call this first resistance R, the first high, when we cross that 100% threshold. So we buy it right off of the open on the next morning's open. We'd say put a market order in to get in. We got into it just under $14. In the next day and a half, you see it went to $28. So we sell half of that position at 100% gain. Now that's my first rule of thumb. I call it stock doublers for a reason, because we're looking for actually two doubles. The first half of our position is a plus 100% profit target. If you can double half of your investment, sell half out of the double, what that does is it gets you your risk capital back. Say you put $1,000 in, you've doubled it to 2,000. You take half of that now $2,000 value, and you put that original $1,000 that you invested on your whole position into your pocket. You now have your risk capital safe. You now have, some would say now you're playing with the market's money. I don't say that because it's still your money. Your remaining $1,000, you'd like to see it double yet again. So we want to target a double on a double, which is a 4-bagger or a 300% profit on the second half of our position. All my testing says that while some of them will go on to even bigger gains, like the old Taser did, that a lot of them, once they hit that 300% gain, that's about as far as they go, give or take. So if it does come back down after taking the first half out at plus 100, you're glad you took half off the table. If it keeps going, you're happy because you've still got some left. So to me, that's kind of a win-win scenario. A lot of people tend to think like I've got to sell it all or I've got to hold it all. I don't like that black and white thinking. I think the market is many shades of gray, and trading like life is. And the bottom line is that you've got to prepare for that. Now, one of the things that I also have taught my stock doubler subscribers, I'm teaching you too, is that sometimes you get a setup point. Like this was Super League Gaming tied into the whole esports trend. I saw that esports was just featured on the cover of Sports Illustrated, one of the hot teams in esports this past week. And so it's like it's becoming a much more mainstream concept of that esports athletes, if you will, are a big thing. This one confirmed the next day's close, but it was way extended compared to the prior day's high, was like 6.5. It closed at 9 the next day. So now instead of being just a little bit above that 100% line, you can see we're past the 200% line. We're almost at 250% above that key moving average. So now that is a bit too extended. So what I tell my subscribers, if I get a buy signal like that, is I say wait for what I call the retest. The retest here is where it comes back in to retrace into this area a couple days later. So now it's back around the $6 level, or a little bit under actually. We bought it at 525 into that retest. And you can see it worked out real nicely, because now what do I know? When it's retesting, I know that that day's low, which is about 475, is going to be my exit. If it closes below there, I will say get out. So I've still got some risk, right? If it's got to close below 475, I bought it at 5.25. I've got about 50 cents of risk plus whatever the violation amount is. It might be 10, 15, even 20% risk. And that's where we try to keep our downside risk, is usually about in that 20 to 25% area. And knowing that, okay, if we are going to lose possibly 10, 15, 20, or 25% on a given stock name, but yet on our upside names, we could double, triple, even quadruple them. And I don't have a chart up of one that we just did that with this week with Torchlight Energy, TRCH. It's become a very hot name. We already bought it a while ago at 2 3/4, sold half of it at 5.5, almost got our 300% profit. It got to 1088 yesterday morning. We're still sitting on the other half of that trade as it came back down. But we've already gotten our double out, and now we're at a risk-free trade on TRCH as well. But I digress, just showing you current examples that you can go look up yourself as you get time. But Super League Gaming, this one then went to double. And look, a lot of times when we get our double target, this was about 10.5 officially that we got our double target in here, and it went to 11, and then it came back down. In the second half, we exited not far off of where we bought it. I think 5.5-ish. We got out of the second half. So even if it comes back down close to our entry level in the second half, think about that. If you sold half at a double, the other half sold out at where you got in. If it comes back down, that still averages a 50% gain on the whole position for a month or less of work. So it gets you way above market returns, and of course still manages your risk and allows you to move trades in and out relatively quickly. This one only took, you can see, from the 8th of March to the 19th of March for its double. So in trading days, that's 11 calendar days, but in trading days, of course, it's less with the weekends. So you see it took about maybe eight or 9 days. So from this perspective, some of these can happen really quickly. Like the EV trend, the electric vehicle trend I mentioned the second half of last year, was basically all tied to stocks that were riding the coattails of Tesla. Okay, obviously Tesla has helped make Elon Musk one of the richest men in the world, and the thought being that, okay, who's going to benefit from this next? Some of these names, like this one, I had never heard of before I got a signal on it. Okay, so Electromechanica vehicle. This is a foreign name where you see, okay, look, there's the setup point, and then it closes above that high the very next day. So we're in there buying right off of this open right here, and you see the first day we're actually intraday, we're down about 15% on the name. Okay, so from 6.5, it trades down maybe even 20% at the low, and then comes back up about where we got in, and then starts stabilizing and grinding back up again. So think about it. We got into this in the neighborhood of about 6.25, 6.5, and you see we get to 13 in a matter of 4 trading days. This is another one that didn't go on any further. It came back down kind of quickly, and we sold out the rest about a month later, about where we got in. So again, we made a double in the first half, breaking in the second, maybe average 50% on the total. So some of them will keep going, some of them won't. But they give you a chance a lot of times to at least double, and you can take that first half off and see what happens. Some of these names like SENS, Senseonics, this is one where we got the signal. Notice, by the way, we were trying to break out before, but it was coming up right near that 100% threshold, but not getting through it. So when it then does clear it on the 14th, we say, okay, it needs to close above that high. Look what happens. There's the close the next day. Gap's way open to the upside and closes still above that line, about $1.50. We're in there buying the next morning right off of this starting open price here of $1.60. So we're in the position for $1.60. Now, if you're thinking about like typically how much you put into a trade, we say make sure you put the same amount of dollars into each trade consistently. So in our model portfolio, we recommend $1,000. So if you're doing $1,000 invested, then that's going to get you, as you can see, a little over 600 shares to take advantage of this. And then, of course, when it doubles, which happens the very next morning, it pops on up and opens above 320, which is our target, opens at 330 here the next morning. So the very next day, we're out at 106% on half that, just over 300 shares will be sold at 106% profit right off the open. So you have these orders. We're clear about what the order needs to be to say sell half of your position, half of your shares, good till canceled order at 320 or higher. It goes a little higher intraday, and then it pops on down back towards the 2.25 range, then bounces back to 3. So at that point, again, you're just happy that you're booking profits and taking the money and moving to the next one. Here's a great example of that. I will never buy at the low of a move, right? So by the time I get my signal, I've got to see some proof that it's already starting to move. This is Aptevo Pharmaceutical. This was back on November the 4th. There's a crossover past that 100% line. So you've got to mark that high of that first time it goes above there and say, what happens after that? That high was about 15 bucks. The next day it closes at about 20 bucks or just over 20. So that's our confirmation. Intraday it was up to 25, closes just over 20. We buy it at about $21 the next morning. I remember it well because it was a Friday morning, buying at 21. It rallied intraday at about 28, closed about 24. We're up about 15%. And then after hours, they announced some great news. And it's up big after hours into the 40 range. And then look where it opens the next Monday morning. It opens at 50 bucks. So you say, thank you very much, Mr. Market. We'll ring the register, sell half our position at more than a double. So we've locked in a guaranteed profit. And then again, this one didn't go much further than that. You might think, well, gee, I'm showing you a lot of doubles that didn't go much further, but there's a plenty of them that go on to go on to double the double yet again, hit the 300% final target too. So, and you can always call us at our 800 Big Trends line and get a full track record on all that stock doublers history. So you can go back and study yourself as deep as you want to. So it's really a beautiful thing. The power of doubling, as I said, the power of compounding is what Warren Buffett calls the eighth wonder of the world. It's a great thing because I don't get to play as much golf as I used to because I'm so busy with the markets. But I have a buddy who likes to play for like $10 a hole, and so I'm like, okay, well, $10 a hole. How about if we just play for a penny on the first hole, but we'll double at each hole to 2 pennies, 4 pennies, 8 pennies. He's like, nah, it's small change. I said, well, let's just see what happens, and we just walk through the numbers here. After 6 holes, you're only playing for 32 cents on the 6th hole. There's 18 holes in a golf match. By the 12th hole, you're playing for 20 bucks a hole, 20 and a half, 20.48. Look what happens by the 18th hole. This would be the 18th occurrence. Put your decimal in here, and then you're going to need to put a comma in here as well. $1,310.72 is what we'd be playing for on the 18th hole. So that's starting at a penny. Imagine if you started at $1 and doubled it 18 times, you'd be up to $131,000 by the 18th double. So the amazing thing about this is, of course, that the gains don't happen in the first few doubles. They happen after a series of doubles in terms of the parabolic like effect, going from 32 cents on the 6th hole, 20 bucks on the 12th, and then $1,310 on the last hole. So that it's truly a parabolic kind of a compounding effect. That's why Warren Buffett has been able to become one of the richest people in the world as well, by as he calls it, having a long runway where he has a super long time frame and lets these things play out. We're able to shorten the runway and compound this double and double on a double in a very reasonable period. Like here's where we did get the 300% target on Plug Power in a total of 9 weeks, so just over 2 months. Now, Plug Power, of course, another EV name, PLUG is the symbol. You go back and look at it late last year, this thing was already starting to heat up, and it had gone from the single digits up. We bought it at about 18 and a half, 1847. So you do the math and you multiply that times 2, there's your first target, just under 37 bucks. And you can see it kind of just keeps grinding higher. It never gives us any retest back into this green 100% line. So it's one of those that it's important that we were on board to just keep the steady ride up. And so we get the 37 target, 36.94 officially there a couple days before Christmas. And I had a couple of subscribers that emailed in and said right after we got out, man, we should have sold the whole thing because look, it came back from almost 37 down to 30. I wish I'd sold it all. I'm like, relax. We still, and this is not an option, we still have time for this thing to play out. Sure, if it keeps dropping, we will eventually get a trigger point to get out, probably somewhere back into the mid 20s. But instead, look at what happens. In a very short period, literally in about 6 trading days, it went from 30 to our final target at almost $74, 73.88, I think is what we needed. So 73.88 was hit 6 days later. So if you panicked and sold at 30, you're really kicking yourself because you leave a ton of profits on the table. That's what my goal of taking that first half of the double and taking that sort of not just the financial stress out of the trade and investment, but also the psychological stress that you experience when you're wondering what's next. And when we have subscribers email in and say, what's next? What should I do next? It's like, follow the system, give it a chance. Let the ones that keep going are going to be where you make the big money. If you take those off too quickly, you're going to really dilute your trading edge and advantage on a powerful growth system like this. One of the biggest names that we called out last year was Novavax, NVAX. When the pandemic hit last February, and of course the stock market started to feel the pain from February 19th peak to the March 23rd low, the stock market dropped 30%. Meanwhile, Novavax was getting ready for a mega, about a 6 or 7 bagger on the stock over the next few months. Now, our system picked it up, and the signal that was the big win for us was right here where it crossed back above this 100% line, and then as of April 6th, it was confirmed just under $20. So if you did the math from $20, you say, okay, up to $40 I'm going to need, there's going to be my double target right in this neighborhood. So you saw half of the position at that plus 100 there when it doubles on the gap up. And then whatever happens from there, you say, okay, look, from 100%, what do we need to get our final target? If we sold half at 40-ish, you double it again, and that's going to be our 300% target up near 80. And you can see 80 is achieved up in here in late June. So from April 6th, you're talking about a trade that took, essentially about 2.5 months to make a 300% gain. It was about 10 weeks. So, and again, it was the one that it came close. It kind of, you see, it went through this slow period here, late April to early May, and it did kind of retrace, but it didn't get back even to our quote retest line that would have been close to the stop point on the trade. So it's like you've got to give those trades a chance to go and not get too reactive, too panicky about what do I do, and oh no, this isn't working in the last few days. You got to have a bigger picture view. So that's where I remind people that come from the option side that are very short term in their thinking, is that you've got to give these trades a chance. Okay, when you give them a chance, I think you'll find you'll be a lot happier. So what are the key elements to riding these stock doublers effectively? They usually have a catalyst that's related to in the right sector with the right kind of company. So we know that like the vaccine stocks are very hot last year, of course. Then of course the EV electric vehicle plays are hot. This year it's a lot more energy, but there's a lot of other special situations that I couldn't just say are just a sector play like energy. So we have names like LEDS had a very quick double for us. That's more of a chip name in the tech space here just a couple weeks ago. So it's one of those things where that you can quickly turn those around and see that, okay, there's just something unique going on and you want to take advantage of it. So you got to see it not just break above that plus 100 line, but then keep going. That tells me that the institutions are practically willing to pay just about any price to start to build their position. Because let's face it, if you're a monster institution moving billions of dollars around, you probably can't buy your whole position in one day unless it's a super liquid blue chip. So these smaller stocks, a lot of them, by the way, don't even have options. But yet my subscribers tell me I love these things because they move like options. They can get me a double, they can get me a triple or quadruple in a reasonably short amount of time. The great thing too is you're not going to worry about missing these trades intraday. We send them out at 6 p.m. on any new entries for the next morning's open at market, typically in almost all cases. Unless they're extended, then we'll put a limit order and we'll tell you exactly what price if needed. But most of them are market orders, so we can just be really sure that we're getting into the trade. Or same way on the way out of a trade on the exits, we'll give you those too. We never leave you hanging. And so then when you get that violation, we'll tell you time to get out of that one too. It's not working anymore. we're not going to make excuses. We're going to say, clean that up, move it on. Time to free you up for new opportunities. The big trend is your best friend. I mean, when I launched Big Trends, people said, oh, so you're buying like multi-years out, right? With the name Big Trends. I said, big trends happen on any time frame, intraday as well as bigger picture. So we're all about teaching about that. And don't trade any old breakout. Too many people are trading too many methods that are giving you way too many ideas, way too much confusion, and frankly, defocusing you from where your money's going to be made in the top, frankly, 1%, the best of the best breakouts. That's how you truly can see powerful results. The other great thing is I do weekly video training for all my subscribers, so you learn while you earn. I update all positions. I show you this is working, this is not working, here's what's next. So when you look back, like again, names that I didn't really know at the time last year, like Vaxart, another vaccine name. This is one that was had a prior signal that made some money, then settled back in, and then we got this next setup point happening right here. You see, then it crosses above there with conviction. We say, okay, there's the confirmed breakout, and now we need to buy right off the next morning's open. Notice that's on a little gap higher. We don't want to try to buy it lower. We want to say, look, the institutions are piling on. Get up, get a piece of this. From under $4, you see it gaps up in the next day at about $11 for more than a double in the first half. And then 4 goes to 16. You can see right near this high. We're out of the trade now at the 300% profit as it comes back down towards $8, right? So that's the great thing too about a lot of these. Plug Power is another one of those I just showed you earlier. We sold it out just under 74 and then a crater back down into the 20s. So it's one of those things where, we're taking advantage of a growth phase. We're booking the profit, and then we're moving that money on to the next fresh opportunity. One that did last quite a bit longer last year is a vaccine name was Inovio. INO is the symbol. That's one that broke out right as the pandemic was kicking into gear, and this is one where you can see you get that crossover point here, that first big breakout day at early March, and the next day it closed above there. So we're getting that entry signal in here in about the $10 range. Just actually closer to 8, I want to say, because our final target was hit up here at about 32, about $8, and so it goes to just it gaps past our $16 target, opens about 20 for more than 100% gains. That's where we saw half of the trade off of that open. Turns out to be a really good exit. But what's really interesting about this is look at all the retests that are happening here. The retest, remember, tests back into that 100% threshold line, and how many times that would mark support for you. If you were on the outside looking in, you got 3 retests that were golden to get back on the wagon or to tighten the stop. But I always tell people, if you're not on a trade and you see a retest, that's another way you could add or enter a position, knowing that if it violates, you're going to get a quick exit and be done with the trade. So one of the great secrets of success of any great trend following method is letting your winners run, but also cutting your losers quickly and at a relatively small level compared to the size of your winners. So those retests are the ideal re-entry point or new entry point if you're a new subscriber coming in. I've got 6 brand new trades. They're brand new to you coming in today, but actually they've been out there for the last week or 2 or 3. But they've all been validated by me before starting the session. Say there's 6 fresh ones still near retest levels where you can get in and know that you've got a low risk and it's still a very good chance at seeing some of these pop to much bigger profit potential. So like I said, the last half was sold, turned out to be on the high day at $32 before it shot back down to 20. So, but that took about 4 months, right? So you've got to have the ability to be patient with these. A big part of not just trading success, but life success is how you manage your time. Putting your time into what's important and not getting hung up in things that are not important. Most traders are reacting and not being more proactive. So I don't want you to react and say, okay, just buy what you hear about on TV or something. It's like by the time it's on TV, it's probably too late. The reality is that you want to be proactive and say, my system's got such power behind the names that I'm trading and that you could be trading that you can say, okay, now you know what you need to do to start get rid of the guesswork and start focusing on the next big institutional favorites. Okay, so like a name last year like Overstock.com, as everything went online and people weren't going out to shop, they're having it ordering online and having it delivered more and more. It just accelerated that trend that's been in motion for a while. And you can see Overstock was confirming for us here just under 30 bucks. And right after we bought it, it drops. And you're like, oh man, we're down about 10%. And that's a retest. That retest had to hold right off that low. And you see it bumped around there for a couple of days, but never closed below that low. So we were able to hold that position in the 30-ish range, sell half of it when it popped up to 60 plus on the gap up. And then the rest of it sold out at 120 and said, thank you very much. Who would have thought Overstock could go from 30 to 120 in right about 2 months, maybe 9 weeks. So it's just a beautiful example where you see this kind of trend in motion that truly accelerates. And what happens is, let's face it, institutions like you and me, they want more of a good thing. They'll keep piling on. So an example of what it looks like when you get a trade entry from us, this is from just right about the 1 year anniversary ago when we bought Workhorse Group, WKHS. Said buy it at market. We got into it on the 24th of June last year, then right off the open. So we just seen our signal here for Workhorse, WKHS. This is an electric truck play. And you see there's the signal setup. There's the confirmation. We buy on the open the next morning right there off of this about $7.50 level. So we saw half of them when it pops up here to about 15. Okay, so we're selling half at that double-ish area, half out. We're a little early. You can see now we need 30 on the rest. It gets maybe to about 22. And then it goes through a long consolidation here, right? This flag or kind of just sort of sideways pattern here till about the beginning of September. Then it goes and pops up to our final target up near 30 there by about the middle of September. And you can see when we got into the trade, we said, okay, once we sold half at a double, we said, okay, here's our final target, $28.84. So it's a good till canceled order. So when it's good till canceled, that means you don't have to mess with it every day. It's just sitting out there to say, if it trades 28.84 or higher, take the money and run. So that's the beauty of this. And so, like I said, if you came in before we, after we got started, I mentioned that we were taking a $10,000 portfolio up to over 92,000. This includes all winners and losers, no commissions, which of course stock traders and stock investors, regardless of your time frame, you shouldn't be paying anything for your stock commissions anymore. If you are, you need to switch brokers or beat them up until they take it down to nothing, because that's where we're at now. And so it's up a little more since in the past months. But the principle here is that I want you to figure out how you can really leverage what is, for me, 30 years of kind of learning this lesson and finding this method and giving you that shortcut to really accelerate your trading and investing success. And people ask me all the time, are these stocks I could also trade options on these names? Some of them are and some of them aren't. And that's one of the reasons why I do like trading the stocks as well as the options, because if they're not optionable, but they can move like an option and double or even quadruple, then I want to make sure we're participating in those. So a lot of the big name, like blue chip optionable names, they're not going to give you that chance to make this kind of speed of movement. They can still make you money, but these have the chance to make you fairly dramatic profit opportunities in very short periods. And like I said, I've got 6 of them waiting right now for new subscribers, so you can already start building your stock doublers portfolio with fresh names that haven't moved that much yet, but can move in very short order and have very manageable risk. And so what we do is, look, we're going to usually, for a year's service to stock doublers, it would be $3,997, almost $4,000 for a year. And you say, why is it that? Because we've had a rate of growth that's made that look like a value. But I'm going to give you like some extra special value points here. I'm not just going to give you a year subscription. I'm going to actually make it a 2-year subscription. I'm going to actually give you what we call BOGO. Buy 1 year, I'm going to give you the second year on me. No additional charge. That would be almost an $8,000 value alone for getting all the trade callouts. If it was a black box system, it would stop there, but it's not. I give you my weekly video updates, which per year is about a $500 value. So over 2 years, that would actually be more like about $1,000 value. So this is even understated in the total value of this package. I'm also going to give you my stock trading bootcamp course. It's a multi-hour course. It's a $297 value, so you'll learn all the ins and outs and can kind of watch several hours of content if this first 45 minutes kind of wet your whistle. Plus my settings and rule sheet, which tells you which moving averages, which elements you need to plug in for that. And I'm going to give it to you all, not for $9,000 plus, but I'm actually going to give it to you today for only $997. That's a one-time investment, no future charges. That locks you in for 2 years. And it's a really great package to learn while you earn. And frankly, if you've been missing these big names or hearing about them way too late, this is how you can start participating. You go to that site, members.bigtrends.com/SDO24. And William asking about our win rate. Feel free to email us, William. I'm going to show you the special page where you can email us with any questions you might have here. When you go to that page, members.bigtrends.com/SDO24, William, you can email us, request our full track record, and you can study this at clientcare@bigtrends.com, or you can call us toll free at 800-BIG-TRENDS. We're happy to send that out to you. Winners and losers are all shown, so you know exactly how our results have been through any market environment. And I'm just thrilled with how well they perform. One thing I didn't mention earlier is that all these stocks are priced at $50 or less per share. So we don't buy the super high dollar ones. It actually makes some of the stocks like Tesla no longer a candidate for me. But the spinoff names that have actually moved even faster than Tesla in the last year are still names that are on our radar and can be triggered. It's just that when they get past $50 a share, it starts making it harder to see those things double, triple, quadruple when they're at $100, $200, $500 a share. So we want speed of movement. And also we don't want to tie up your capital too much, so that even if you were, think about this, even we'll hold up to 25 names in our portfolio. If you're only buying one share of all those names, at most you could get, I'd say the most it could cost you, if you were saying one share a piece, would be $1,250 on a share of 25 different names, $50 per share, and that's at most. So you can start on this portfolio with a very small amount of cash. So we set it up really easily to pay with credit card or with PayPal. And we do ask that you review our full terms and conditions. If you don't know Big Trends, I started the company in 1999, so we're now in our 22nd year. So we've been around a long time helping people through the ups and downs of the market. And a big part of this is making sure that we can have you easily implement it. So like I said, being able to get the trade alerts at 6 p.m. Wall Street time, a couple hours after the market closes, gives us time to put all that stuff through and all through the analysis framework, and said these are the best new buys, these are the ones that need to be exited, and then put an email together that goes out at 6 p.m. so you know what to do come the market open the next morning. Do we do any shorts? We do not do bearish trades there, Kevin. Good question. These are bullish only. We don't do inverse positions. We've studied that, and while we could have made some money on that, it also increased the risk of the portfolio a lot when you get caught on the wrong side of a short or inverse position. So what'll happen is if it's a bear market, you'll see us build some cash. We won't get as many signals, or we'll rotate into the signals. Like last year, our portfolio was up when the market was tanking in March of 2020. We made money in March of 2020 because of the vaccine play. So that we actually, our portfolio rotated to where the money flow was going positive, even as everything else was getting sold off, we made money. So that's what we count on, is that it'll either go to cash more, or that we'll find the other hot names in the next bear cycle along the way. So we're very confident in that. But yeah, all this value, like I said, you're getting all these extras, all that's part of that members.bigtrends.com/SDO24 offer. And so check that out. It's just $997. I think you'll see tremendous value on that. And frankly, if you have any questions getting signed up or getting set up, you can always call us toll free at our 800 Big Trends number, and we spelled it out there for you, 800-244-8736. But if you can't remember it later, just remember 800 Big Trends, because we are bigtrends.com. Let me see what other questions I might have missed real quick. What is the 100% line? So it's 100% above a key moving average there, William. So when you go back and you look for that, you're saying, okay, look, I'm not even considering a stock for purchase unless it's proved to me that it's going past 100% above its key moving average and that it keeps going up. So that automatically deletes 98 to 99% of the active stock database. It's just not moving that fast. So you're getting into the top 1% or less than top 1%, best of the best names that really have that potential to move, that the institutional money flow is powerful and is really helping you along there. So, and you can always come up with reasons why something was moving. So the key is that we just need to see that the money flow is there. I'm not going to ever be theorizing a fundamental reason that this stock should eventually move. It just hasn't yet. I'm going to say it's got to be starting that move. It's got to be happening. I'm at the end of my time. I want to hand it back over to Anna so we can get on with our next great speaker. And I know that you're going to enjoy the rest of the Investor Expo today. So hang around for all the great speakers. Thanks for having me, Anna, and I hope to see you all real soon.
Price, we still have time for questions. John didn't arrive yet. He's having
great.
some troubles to enter the room.
Okay,
so
sure.
Take your time.
Thank you very much. Well, let me go back, as Kevin's asking about describe my indicator again. So let me go back real quick. Let me find you a chart real quick so we can go back. So workhorse, okay? So it's 100% above a key moving average. You get those settings when you come in, okay? So the idea is, you know what, okay, 100% above a key moving average. Are you kidding me? That sounds way overbought. That's one of the things in just about every great indicator that I've either traded or developed is that overbought is not a bad thing, folks. When you hear the word overbought, most people say, I should stay away. That must be at risk of coming back down, right? But actually, you need proof that it's that the money flow is there, and like I said, institutions will almost pay any price if they want to get on board these. You know, so our system, by the way, did pick up GameStop last fall and did a good job of riding that one as well. But you know, bottom line is that, okay, you can see here, gave the signal on workhorse. The setup point is when we cross that 100% line. I don't buy there. So Kevin and others that came in late, I'll put a big line of resistance right there and say, okay, you know what? It's got to get through that high in a future close to prove to me that indeed it's getting through that wall of resistance and that the institutions are willing to start pouring the money on and the gas on in the form of more buying power. The next day's close, and to circle that right there, that's our confirmation that it closed above there. So then the arrow is to buy the next bars open, which we bought workhorse in about the 7.5 area. So we sold half out at the double, which is about 15-ish, and the rest of it out just under 30. So basically we got out, I think I showed you 28.84 was our final target on workhorse, and we were long gone before it came back down into the teens here a few months ago when they were worried about losing some kind of a postal service order for like $500 million. Okay, so basically, if you look at that, let me go back to this order page. You know, when you go to that page that I showed you, members.bigtrends.com/SDO24. SDO is for the stock doublers. And then 24 for the 24-month term, you're getting not 1 year with this special, you're actually getting a second year BOGO special that I'm adding a second year free bonus when you buy this 1 year at the already well discounted 75% off the usual annual rate, just $9.97. So bottom line is it's a phenomenal value. And like I said, you're also going to get all the other educational bonuses when it comes to let me just go back and show you this real quick here. The weekly video updates, my stock trading bootcamp, multiple hours of training, plus the settings and rule sheet of exactly which moving average and the threshold values and how you need to set that up so you can follow along at your end from your trading computer, however you like to trade and invest. But like I said, the beauty of this is you're not focused on intraday charts. You're not worried about missing anything intraday. You get the alerts at 6 p.m. And like I said, I've got 6 new trades that are recent buys that I consider to be still a great risk reward trades that you can go ahead and get into now and start participating in our latest stock doubler signals. So call us at 800 Big Trends if you have questions. You can email us clientcare@bigtrends.com if you have any questions that way too, or just go to this page, members.bigtrends.com/SDO24. I think you're going to not like it, but love it in the value you get, as well as, of course, the opportunity to make some great returns. And I get a lot of subscribers who come from the option space and say, wow, these are like options without the time decay. So that's why I remind people, hey, I've traded options for 30 years. I love options still, but a lot of these stocks don't have options yet, but they probably will after they make their mega runs. So how many alerts? You'll get at least a couple of trades a week, Kevin. We probably average about 8 trades a month, maybe sometimes up to 10. In a busy month, maybe a dozen new buys, and we'll clean up the ones that aren't working.
And today I'm going to talk about the big stock plays for the rest of 2021. First half of the year actually turned out to be harder than many people expected, although we are up an incredible 70% so far this year. You really have had to dance in between the raindrops to avoid the big hits and keep bringing in the big money. And of course, we've been doing that all day, all year long. Goldilocks is back and is probably moving in for the duration. And I'm broadcasting you live today from Silicon Valley, California. So take out your pen and paper to take notes or start typing into your smartphone if you're a millennial. What I'm about to tell you will blow you away and change your life, for I am in the investment epiphany business. Why listen to me? Well, other than putting together 27 speakers in this fabulous investment summit, I have 50 years of experience in the global financial markets, 10 years as the economist correspondent for Tokyo, Japan, and later the White House, 10 years running the international equity division at Morgan Stanley, a brief time out as a Marine Corps combat pilot for Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, and now 14 years of publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still working and still breathing. What happens when Goldilocks moves in? Well, our trailing 12-month return is up 124.92%, and that is a daily audited performance from our Mad Hedge Trade Alert service. So this is a typical hedge fund type performance. When it's dead, we go sideways. When it's up, we go up sharply. And when we have years like this, we basically go straight up almost every day. I think out of over 100 trade alerts issued this year, 96 made money, 4 lost money. And the two that lost money were shorts on Tesla. Shorts I put on literally a day too soon, up in the 800s. My family origins are very humble, growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood playing Little League baseball and becoming an Eagle Scout. By the way, my 2 daughters just became the first ever female Eagle Scouts with the Boy Scouts. Wasn't much to do in the old days in California but hunting, so I picked up a job as a paperboy for the Los Angeles Herald-Examiner. There I found the stock pages, bought IBM at $20, sold it at $30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I'd earned enough money to fly to Europe. By the age of 17, I had visited more than 50 countries and spoke 4 languages. And this is one of the first newspapers I ever delivered, covering the Kennedy assassination in 1963. At UCLA, I majored in math and DNA research, which lately has come in very handy with the pandemic and so on. That landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of intelligence missions, where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine in London. When they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. Ta-da, enter the stock market. Of course, after 10 years of government service, all I got was this box of medals, which I pull out once a year on Veterans Day. And of course, doing research in Asia in those days meant carrying a World War II 45 caliber Sten gun, which used to reliably jam on every sixth shot. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market. Otherwise, Wall Street would have run out of smart people a long time ago. So I got into the industry joining Morgan Stanley. After 10 years, I started my own hedge fund. And there I'm sure you're thinking, boy, the years have been tough. That's when I was 32. That's me up there now. And that's me losing the All Japan Karate Championships. Warning, do not enter a karate final with a broken wrist, which I did. And boy, it hurt like hell and still hurts when it rains. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Of course, that's back when there were only about 25 hedge funds in the world. Then the money started to really pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. You get to do things like fly your own private plane around Europe, buy the latest hot car, go marlin fishing in Mexico, and collect vintage Rolls Royces. That's my entry in the Pebble Beach show. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the Diary of a Mad Hedge Fund Trader in 2008, which seems like a million years ago. Now I spend my days pursuing my first love, finding winning trade alerts, but now I do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. Haven't been able to visit the one in Switzerland for 2 years now because Americans are still banned from visiting there because we are too infectious. There's far more satisfaction leveling the playing field for the average guy and teaching them how to trade, and that includes you. If I can take a $50,000 account and turn it into $500,000, that is more job satisfaction than I could ever get anywhere. However, every silver lining has a cloud. Last year, I paid $8.2 million in taxes on $20 million in trading income. I just fall down on my knees and thank goodness that I can pay this without having a dent in my lifestyle like it used to in the old days. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. If you see an old plane flying loops over San Francisco these days, it's probably me. The ultimate luxury, of course, is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and I'm a major donor to wounded warriors. When the wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. And that's me going through my in-laws' house, which was completely burned to the ground. You can see here there's a SIF box where they were looking for a wedding ring, which they eventually found because it was made out of platinum, which has a higher melting point than gold. That's one of the little tidbits you learn after trading commodities for 50 years. There is a method to my madness. After a much needed time correction, stocks will explode to the upside in the late summer or fall. 2021 could be the best year of the decade for stocks, with another 15% move taking us up to Dow 40,000 by the end of the year. That's up 30% on the year. Record earnings are catching up with explosive moves in stock prices off the March 2020 bottom. 2020 was only a short-term dip in a 20-year bull market that may have another decade to run. Most pandemic business activity wasn't lost, just deferred, leading to massive spending in 2021. Many domestic recovery stocks have barely moved in a decade and now have enormous upside potential. 2021 will be a year to be fully invested and 100% risk on. Don't use last year's playbook. New sectors are taking the lead in 2021. And if you're wondering why I'm in such a good move in this picture, it's because I'm flying a P-51 Mustang, a World War II fighter. And if you don't know what that is, this is my friend Geraldine, which flew combat missions at the end of World War II. It's kind of a combination of a jet engine and powered plane and a piston. Corona update. The end of the pandemic is upon us. Massive distribution effort has proved hugely successful. 50% of the US population has now been vaccinated. 2 to 11-year-olds will soon qualify for the Pfizer vaccine. New cases have been falling off a cliff from 250,000 a day in January down to 15,000 a day now. That's a decline in new cases of 94%. You know, we're really only getting about 250 or 350 cases a day now. That's roughly 2.5 cases per state. In other words, it's almost gone. In a year, no one will be able to get a job or ride public transportation without a vaccination card. At least 50 variants are now in circulation, with the most contagious and fatal now dominant. Booster shots to deal with these will be available in the fall. US cases top 33.4 million, deaths topping 600,000, or down to 350 a day. By August, the pandemic will no longer be a stock market factor. Good riddance to you, virus, Mr. Virus. These are new reported cases. You can see the peak here in January at 250. We are on our way down to 0 or single digits at the worst on a national basis. This is the infection rate we had in January 20th. You can see hotspots all over the country, especially in the southern states. This is the infection rate now, and you can see it's almost completely disappeared, with former hotspots in Michigan and Florida completely disappearing. This is the global chart. Of course, we're one of the first into the pandemic, and we're also now one of the first out. China, of course, had it first. The major epidemics now happening in South America, especially Argentina. Global economy is breaking the speed limit. Q1 GDP came in at 10.7%, and Q2 could be even hotter. Weekly jobless claims are now down to 385,000. And I saw this morning the JOLTS report for new job opening was a record 9 million. I mean, that's an increase of 2 million in a week. May non-farm payroll report came in at a hot 559,000. That's still a ballistic rate. Labor shortages are developing across the country in almost every job category. Analysts are now looking for 43% earnings growth in Q2, 55% in Q3, and an incredible 75% in Q4. These are World War II type numbers. No one has seen numbers this hot in 80 years. Stocks, we have had a correction underway for 3 months now. They've just stalled short of an all-time high in an overdue summer correction, but the downside is limited to no more than 5%. We had 2 5% corrections in May, and that may be it, although I think we will test 1 or 2 more times. We're waiting for earnings to catch up with red-hot stock prices. Tech comes back from the dead, ending an 8-month correction. Global chip shortages finally caused the sector to catch on fire. If you own NVIDIA, you're probably dancing a dance right now. Stalled interest rates have caused many traders to retreat to the sidelines, causing the volatility index to crater to a new $16 to $20 range. At least another 14% in gains are left for 2021. S&P 500, 4,800, here we come. Stick with the barbell strategy. We'll keep rotating back and forth between tech and domestic recovery for the rest of this year and maybe all of next year also. This is the S&P 500. This is our support level at 405. We're testing sort of the mid 420s right now. I see, another fail here, another pullback well above this bottom line here at 405. And after that, new highs targeting 475 in the SPYs by the end of the year. So the barbell portfolio, let's talk about that for a second. That's 50% big tech and 50% domestic recovery stocks. You want to be in big tech because you have 2% of the US workforce. producing 27% of the market capitalization and an incredible 38% of US earnings. 50% of domestic recovery stocks include railroads, airlines, cruise lines, couriers, banks, construction, credit cards, hotels, casino, and online ticket sales. And the potential upside for the domestic recovery stocks is greater than it is for big tech. Although over the very long term, big tech outperforms everything. Here's NASDAQ, and you can see these blue boxes are the buy and sell indicators, signals we get from our in-house market timing algorithm, and I'll talk about that in a few seconds. However, we see we've been chopping in this range really since September, and we're about to break out to the upside, targeting 18,000 in the NASDAQ by the end of the year. Microsoft, one of our favorite stocks, hit a new high on their big move into the cloud. They moved to a subscription-based service on their core products in operating systems. And of course, the pandemic drove an exponential growth in new computer sales. I ordered 4 Dells in the last 2 months. One of them took two months to get to me because of chip shortages. Only the really high-end, most expensive computers are being delivered on time. Apple has been in another 9-month correction, and this is a classic technical chart. We're kind of coiling to a narrow range, and what happens is you get some earnings announcement, some product announcement, and you blast off to the upside on large volume. We're looking for $200 a share in Apple by the end of the year. That is a more than 50% return by the end of the year. So use any dips you get to pick up some more Apple or 1-year leaps in Apple on the long side. Amazon is one of the most incredible growers in the world right now. This is a company that has seen a 44% increase in sales over the last year, and the stock is unchanged. I mean, you don't get any better value adjustments than that. And we're looking for 5,000 a year in Amazon by the end of the year. You can see we've been buying the dips here, took profits one time on the February peak, and we're looking to get back in on every dip from here on. PayPal, another big star in the fintech area. Also, they picked up some Bitcoin exposure. This is the touchless payment star. There's a huge move going on worldwide to online commerce, also greatly accelerated by the pandemic. Turns out that cash money, dollar bills spread the virus. Yes, COVID-19 viruses can live on linen dollar bills. So looking to buy the dips here, looking for an upside breakout to $300 a share by the end of the year in PayPal. Salesforce, big in CRM, also has been in a sideways correction since September because of a massive $27 billion takeover with Slack. That kind of killed the momentum for the short term. Looking for a new target here, $400 a year by the end of the year. That's going to be another big mover. Second half of the barbell bets on a massive domestic global recovery to continue to 2023. Upside potential for recovery stocks is far greater than tech. Some of these have not moved for 5 or 10 years. Focuses on economically sensitive cyclical industries, makes a great counterweight to a high growth tech portfolio. We could spend all the next 2 years rotating back and forth between the two groups. Boeing, one of our favorites here. We started buying it last year at 95. We're targeting 300 by the end of the year. End of the trade war is a huge plus. End of the grounding of the 737 MAX, another huge plus. They have a big inventory of planes left over from last year's grounding to move. And guess what? There's a global airline shortage now that the pandemic is winding down. Banks, we absolutely love the banking sector. Still one of the cheapest sectors in the stock market after rising 80% from the lows last year. still cheap, still trading under book value. They love rising interest rates and falling default rates, hugely overcapitalized thanks to Dodd-Frank. And they are also moving into online banking so they can shut down their expensive branch networks to cut costs. I know some of you like going in to talk to the bank just to talk to the pretty tellers. They're all going to be gone in 5 years. We're targeting $200 a share this year for JP Morgan, the quality play in the banking sector. Jamie Dimon, one of the best CEOs in the country. So there's still another 20%, call it, this year in JP Morgan. We've been buying this almost every month this year on every single one of these dips. Credit cards, of course, massive expansion of online commerce means massive expansion in the use of credit cards. Visa is our favorite play here. We've been buying the dips here, here, and here. And again, we're targeting $300 a year by the end of the year. By the way, 15% of all credit card charges are for travel, and with travel experiencing the mother of all recovery booms, that leads to a big expansion in credit card sales. Going forward, Union Pacific, and any economic recovery, you need to move a lot of stuff. Main east-west route moves oil and food to China, electronics and cars back. It's not your father's railroad. It really is become a tech company. And we've been long in this for the past year. Again, looking to buy every dip in Union Pacific, and we're targeting $300 a share here. Retailers, I bet you're kind of sick of sitting around in your sweatsuit for last year. I've been living out of a Marine Corps sweatsuit since last March. So we're about to see a massive boom in retail sales. Kohl's has already been a big participant. We picked Kohl's because it had the strongest balance sheet in the sector. Been buying the dips here. We're looking for $100 a year, a share in Kohl's by the end of the year. Of course, another way to move stuff is through FedEx and UPS. There's been a huge increase in overnight deliveries. They're bringing on a lot of third-party contractors to handle the massive volume. So this is another good play. We're targeting $400 a share in FedEx by the end of the year. And I hope they show up at the end of the day with my last laptop, which I bought a couple of months ago. Just waiting for the doorbell to ring. Caterpillar, of course, is facing a perfect upside storm. Ag plus infrastructure plus housing plus China means you sell a lot more Caterpillar tractors. We've been buying the dips for the last year, and this one, hugely successful. We're looking for $300 a share in Caterpillar. Of course, small caps do better in economic recoveries than large caps. That's because they have more leverage, more debt, and less stable businesses. The best performance of a stock coming out of a bear market is when things from absolutely terrible to only semi-bad to sort of okay. That's where you get your 5 and 10 baggers from. So in the Russell 2000 ETF, the IWM, we're targeting $250 by the end of the year. Berkshire Hathaway, if you want one stock that covers the entire barbell strategy with one ticker symbol, that would be Warren Buffett's Berkshire Hathaway. They're heavy in financials, have 10% of Apple. They bought $25 billion of their own stock in 2021, and they still have another $150 billion in cash on hand, which they can use to buy back more of their stock at book value or even a small premium. So I'm targeting $300 in 2021, which we've almost already made, and $400 in 2022. Another great play, goes up almost every day. Bonds have gone to sleep. Let me take a look at the bond market right now because I have positions here. And the TLT up 91 basis points today. Bonds remain trapped in a narrow range and could stay there for months. Quantitative easing is continuing, says Fed Governor Jay Powell. Even if the economy improves, that means the $120 billion in monthly bond buying remains, preventing a serious bond market sell-off. Fed is doing everything possible to create inflation. We got one hot month. We'll find out on Thursday if we get 2 hot months. I'm piling into financials which love higher interest rates because they are essentially an indirect bond short. 2% yield on Treasury is what we'll see by the end of the year. That's where you make money on your shorts. That's the quality trade of 2021. TLT could go from a high of 180 last year down all the way to 105 by the end of 2022. That makes it a great short. Here's the TLT this year. Went short like crazy with a triple position at the beginning of the year. Got a 25-point collapse. Since then, it's been sideways. Another time correction here. Look for, a couple attempts to rise to 141, 142, and then after that, down to 125 by the end of this year. Here's the yield chart. You can see the big jump in yields from 90 basis points at the end of last year to all the way to 176. Since then, we've been trapped in a 20 basis point rise. Eventually, we do hit 2% when yields take off. Foreign currencies, we're looking for a shrinking US dollar. US dollar has hit a one-year low as its yield support disappears and rising interest rates are put on hold. Q1 strength is unwinding rapidly. A stronger American economy leads to a weaker greenback as imports surge. Expect more of the same. Massive U.S. government borrowing is debasing the dollar at an epic rate. Any dollar rallies are temporary and short term. Bitcoin hit a new high at 66,000, dropped all the way below 30, and I think we may be below that today. They dropped a whole 30% in a week. Keep selling short all U.S. dollar rallies. Its yield support is gone forever. Buy the FXA Australian dollar ETF and the FXE on dips. U.S. dollar basket, that's a basket of foreign currencies. And you can see the U.S. dollar, we have been aggressively short since the beginning of the year, and we're looking for new lows ahead. Australian dollar, this is a 11-year chart, and you can see we hit the bottom last year at 55 cents. Have since rallied just short of 80. I'm looking for 1-to-1 on the Australian dollar by sometime next year. The Aussie is essentially a call option on any global synchronized recovery, which we have. Bitcoin, boy, it doesn't get any more technical than this. Perfect head and shoulders top here, shoulder, shoulder, head. Trying to hold this level. If it doesn't hold here, we'll break down to maybe 20,000. Historically, 85% is your normal correction in Bitcoin. We've had 3 of those in the last 10 years. We'll see if this level holds or if we really do go for the full 85, which would take us down to about 10 or 15,000. Then I think you get a lot of institutional participation coming in for the long term. Energy is having a long-term going out of business sale, but you don't want to be short energy in any economic recovery. It hit a 2-year high as the economic recovery boost temporarily offsets the long-term bear trend. The end of oil is upon us, but it may take 30 years to unwind the existing infrastructure. All U.S. car production in the U.S. will be electric by 2035 or sooner, wiping out half of all U.S. oil consumption. Hugely anti-U.S. Administration will do what it can to accelerate the process with taxes and alternative energy subsidies. Oil consumption will become a China-only business, with them already taking 80% of all Persian Gulf output. Why fight a war in the Middle East if we're only protecting Chinese oil? That is the real reason why we're pulling out of the Middle East. Avoid all energy plays like the plague. It's the new buggy whip industry as the U.S. decarbonizes. And I won't miss the Middle East. I covered it for 50 years. I participated in 3 wars there. I won't miss the wars. I have to tell you, I still set off metal detectors thanks to the Middle East. Here's oil, and we've had a huge run off the bottom when the futures market actually hit negative 37. I bought oil at negative 5 and lost money because I got stopped out of the futures. Here we are up 69. Too bad I couldn't hold on. But I'm looking for a peak somewhere up here, the 70s or 80s. After that, we're looking at another visit to $10 a barrel and maybe even negative prices again. Here's the 20-year chart. You can see we're on a very long-term downtrend here, lower highs, lower lows, and just a matter of time before we hit 10 again. Precious metals are back in fashion. They entered a 4-month correction, are taking a run at new highs. Stalling interest rates give gold a good boost, which yields nothing. Shareholders are picking up the yellow metal as a hedge. Inflation fears with a 4.2% in May. We get the next inflation number on Thursday. That could prompt more panic buying of gold. Silver is the better play here on solar and EV demand, which all require some small bits of silver. Gold will eventually recover when U.S. borrowing becomes so massive it undermines the value of the U.S. dollar, even in the face of higher interest rates. That's me doing some Christmas shopping in Istanbul in the gold market a few years ago. I did tend to get around a lot before the pandemic hit. Here's your gold chart for 6 months. Recovered almost all of the losses off the March bottom. Looking to buy dips here. We're looking for 3,000 an ounce by 2023. And if you like gold, you have to buy Barrick Gold, the world's largest gold miner. We got buy signals here in March, April, and May. So looking to buy gold on dips. We're targeting $50 for Barrick, more than a double from here. Silver looks even better. We're looking for $50 a share in the SLV. And historically, this always outperforms gold to the upside by at least a margin of 2 to 1. There is another alternative investment opportunity out there, the next trillion-dollar company, and that is Tesla. Q1 earnings were up 48% year on year. Up on a quarter, up 104% year on year. Battery costs have dropped 80% over the last 10 years and will fall by another 80% over the next 10, or 2 if they can mass produce solid state batteries. Second factory in Shanghai and a third in Austin, Texas. Fourth in Berlin will take production from 500,000 to 1.1 million this year. Eventually, Tesla will have 100 factories around the world making cars on license. The data collection is worth more than the car. That's an $8,000 a car upgrade. U.S. electric car sales have risen from 0% 10 years ago to 4% of the market today and will soar to 100% in 20 years, actually 15. The Model Y small SUV will become the biggest selling car in the world. Tesla is already outselling all premium car brands in the US combined, including Mercedes, BMW, Audi, and Jaguar. And the rest of these have gone nowhere with their electric cars because they came in 10 years too late. Many countries and US states have banned internal combustion engines by 2030 or 2040. Tesla is already the world's largest car company by market cap at $800 billion at its peak, could grow 12-fold from here to $10,000 a share. This is the new solid state battery, and unlike traditional batteries, this will be a layer battery wrapped around a central core, which allows a 20-fold improvement in battery densities. That means you shrink the cost of your battery by 10-fold or more. Got into Tesla originally after the IPO blew up at $3.30 a share. It then went to 904, 295 times. It's a single best recommendation by the Mad Hedge Fund Trader over 14 years. And we still see another 12 bagger in it from here going to 10,000 by 2030. Of course, if you buy Tesla stock, you get the car for free because you're going to afford it. And this is actually my third Tesla. It's the 162,000 fully tricked out performance model with the ludicrous mode, which takes you from 0 to 60 in 2.9 seconds. Each of these gull wing doors has its own algorithm, so it never opens and closes the same way twice. This is my first Tesla, chassis number 125 off the assembly line. Best design in the world doesn't help you when a drunk driver in a pickup truck hits you from behind on Christmas Eve. Of course, a lot of people talk about Tesla. Very few have taken them apart, as I have done. Here you can see the carbon fiber wheel well, which make this the safest car in the world. The lithium ion battery under the back seat. This is going to go from 1,100 pounds down to maybe 100 pounds to get you a 500-mile range. And in 5 years, the entire car will be made out of carbon fiber, reducing weight even more. Right now, these are aluminum panels to save on weight. Unfortunately, you ding this thing, it costs a fortune to repair because very few people can repair aluminum. Elon Musk's latest comments at his earnings announcement is that they are evolving into the world's preeminent robotics and AI company. It is building the largest neural network in history, which all the Teslas ever made are talking to each other, some 2 million by the end of this year. When the US goes all electric in a decade, the size of the power grid is going to triple. That means you want to buy copper, among other things, or else brownouts and outages will become constant. Every home in the country is going to need solar roofs to meet this demand. Demand for cars is the greatest Tesla has ever seen, far beyond their ability to produce them, and Q1 is the slow quarter for the auto industry. Oh, and the company made $100 million trading Bitcoin in Q1, about a quarter of total profits. Don't play with matches. You could probably do okay just buying all the stocks I mentioned above and forgetting about them. However, the reality is that conditions for these companies change every day. They are all viciously competing, trying to put each other out of business. If you don't get daily updates on the fundamentals, you could easily get wiped out. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket to avoid an out of the blue blow up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And that's me sending you a trade alert from the coast of North Africa. I'm trying as hard as I can to smile because it is 120 degrees right there. When those winds come off the Sahara, it's really amazing. The harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct trading and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that problem is to get yourself educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? They never sell. They also have to pay taxes if they never sell. This is the last broker I talked to. His name is Pinocchio, and I met him at the shop in northern Italy where the legend originated. You really need a pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. You just need to know which 95%. There are a few great sectors, a lot of awful ones. You can get a 10 times return on the great ones, could get wiped out by the losers. Let a 50-year veteran like me steer you to safe waters. Let me sit next to you and guide your hand on every winning trade alert. Here's our secret weapon, the Mad Hedge Market Timing Index. And this is an indicator of whether you should be buying, selling, or doing nothing. You know, it updates itself several times a day, took 1,000 hours of calculations by a team of mathematicians to come up with this. It analyzes 30 different economic, tactical, and momentum-driven indicators all day long. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds, runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms provide you with a defined, systematic trading discipline that will enhance your trading profits. I'm not the only one using algorithms. I was on the Miami waterfront 2 years ago, and I found this super yacht, and look what it's called, Algorithm. Obviously, a few trades paid for this little baby. Some 80 to 90% of all current trading is algorithmic driven. This is 3 years of profit predictor performance, and you can see we get lots of buys at market bottoms, lots of sells at tops. It's enough to make several round trips a year. It is a real money machine. This is our 14-year performance for the Mad Hedge Fund Trader. We are the blue. We've averaged 42.9% a year with our trade alert service. That is double the S&P return over the same time. Last year, when we had the big crash, the S&P 500 dropped 40% in 6 weeks. We were only down 12% at the worst, and then took off to new highs almost immediately. That is not unique to me. That is a typical hedge fund type performance, at least a good hedge fund performance. This is what you want to get involved with all day long. Bill was a struggling tobacco farmer in Virginia who wanted to supplement his fading agricultural income. After making $3.4 million with the Mad Hedge Fund Trader, he still farms, but now he's growing grapes in California's Napa Valley for the high-end wineries. And Bill very kindly sent me a case of wine of Cabernet last week, and the bottles cost about $400 a bottle. So it was about a $5,000 case of wine. Bill, thank you very much if you're listening today. Those wines are incredible. Philip was tired of working in the boom and bust of the oil and gas industry in Texas. After doubling his money every year for several years, he now earns a generous living as a full-time trader. And Jackie was an Australian hospital administrator who turned $50,000 into $2 million with the help of me and became a major player in technology stocks. She now lives a life of leisure with her stock profits paying all her bills. So what do we do about all this? Well, stocks, you want to buy the next dip. Bonds, you want to sell rallies. Commodities, buy dips. Energy, stand aside. Currencies, sell short US dollar rallies. Precious metals, buy dips. And we update this every week. So if you are not up 124.92% in the past 12 months, as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 124.92 can be yours. And we have many, many clients who either match this return or they do better than that. 42.01% average annualized return. You get those kind of numbers, you can do things that other people can't do, like ride the owner's suite on the Queen Mary 2 from New York to England. When you get to England, you can then take the Orient Express to Venice, Italy. Warning, every dinner is black tie, so make sure you bring 2 tuxes on this part of the trip. Once you get to Venice, you can go island hopping in your own private helicopter. The very long view, and this is the most important part of this presentation, the 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the market, will fade from the scene. That will create an economic boom that will last another decade starting this year. And that's me watching climbers come down from the Matterhorn from my chalet in Zermatt. From 1982 to 2000, the Dow average went up 20 times in 18 years. Are you ready for a replay? This is what happened the last time we had a demographic tailwind like I just described. So this is what the next 10 years look like. Up 20 times from the 2009 bottom in 18 years, takes you to a Dow 120,000 by 2027. And if you think I'm smoking California's most popular product, think again. We're already halfway there. We only need one more 4-bag return to get us to 120,000 by 2027 after already having done 120 times return since 2009. So think a 4-bagger on a 4-bagger taking us to 120,000 and we're halfway done. Except this time it's different. Technology is hyper accelerating on all fronts simultaneously, and the pandemic sped up this rate of change. The development of functional quantum computers means that computational ability is about to increase 1 trillion-fold at no cost. The world's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. All major human diseases will be cured within 10 years. Live another decade and you'll have a shot at living to 150. Needless to say, tech and biotech stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So he'll show you how to play the next 86,000 Dow points. Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry. Lemering Combat Pilot steer you to big profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And that is my 1932 de Havilland Tiger Moth. Notice the design flaws, gas tank directly over your head, and no brakes. That's why we can only land on grass fields. This is a typical trading history for 1 month with our trade alert service. We bought the S&P 500, made a 16% profit, sold short treasuries, made 8%, bought the Russells, bought Amazon, bought Apple, sold short Biogen, got stopped out, or bought Biogen, but got stopped out with a 21% loss. Bought Palo Alto Networks, sold short the yen, sold treasuries, bought SPYs, and bought gold. So 10 out of 11 trades profitable. We actually have done much better than that with a 95% success rate over the past year. Just a matter of time for tech and biotech break out to new all-time highs. Watch this space melt up going into the end of 2021. Get ready to start reeling in those whoppers with Global Trading Dispatch. And this is a 24-inch rainbow trout, which I caught in northern Nevada. Here's how it works. Algorithm predicted an upside breakout in Tesla last year by sending out a buy signal right here. So we sent you a trade alert by email and text message, which you get in 5 seconds. It said buy Tesla at 202 or best, opening trade, portfolio weighting 10%, $10,000 exposure, had you buy 49 shares. What happened? It was up 63% in 20 trading days. So did we sit down and pat ourselves on the back? No. We sent out another trade alert saying sell, take profits. Sell Tesla at 349 on this trade. We made $7,203 in little less than a month. Did we just forget about Tesla after that? No, it just kept buying the dips whenever our algorithm told us to do so. We bought here, here, and here, eventually chasing the stock all the way up to $904. We've been in business for a long time now. We're one of the oldest trade alert services in the industry now, and we have a pretty substantial history of mad hedge 10 baggers. Zoom Communications, bought at 60, it went up 10 times. Lam Research, maker of semiconductor manufacturing equipment, up 10.6 times. Moderna got in before the pandemic. It went up 12 times. NVIDIA, up 16 times, and it's still climbing. Hit 700 this week. Square, up 25 times from our entry point, got in after the IPO. And of course, the granddaddy of them all, Tesla, up 295 times, $3 to 904. Buy before 20 trillion hits the market. That's how much quantitative easing and new spending by the US government is about to hit the economy. A big chunk of this is going into stocks. 908 billion stimulus package, 2 trillion in savings locked up by American consumers, 1.9 trillion stimulus package passed in March, infrastructure package now being negotiated, $1 trillion in student loan forgiveness is coming down the pipe, 5 trillion in money market balances yielding zero, enormous subsidies for any alternative energy companies like Tesla's, big tax cuts with return of the deductibility of $1 trillion worth of state and local real estate taxes known as SALT. With my global trading dispatch service, you get instant trade alerts and at-market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent topics, invitations to strategy luncheons around the world once the pandemic ends, more educational videos and webinars than you can consume in a lifetime, and access to a 14-year database on investment ideas. I'll even give you the name of a surfing camp in North Africa with a senior division warning it's harder than it looks. This is the one-stop shop. It's for individuals who want to understand what's happening with their retirement funds. It's for people who want to learn how to trade for a living. It's for small institutions and financial advisors who can't afford an in-house research department. Get in while the melt-up is on. This is what you get with our package. You get the daily research report called Global Market Comments. You get a Mad Hedge Hot Tips, the 5 most important things happening today and what you need to do about them. You get our annual asset review, which we're still holding to, with predictions on all the best assets to pick up. This is what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay it because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients. And I'm not going to charge you $3,000. That's the cheapest we offer this service for on our website. This is the real deal. Creating this product cost me millions of dollars. With the best customer support in the industry, running it costs me millions more. This is the offer you can't refuse. Today and only through this webinar, you can get a 6-month subscription to Global Trading Dispatch for just $997. That is a 66% discount to the website price. Just click on the chat box on the right. You will see a link that will take you to the dedicated sales page, which is only available right now. I only take 25 new subscribers at a time because we don't want to overwhelm the markets with a batch of new trade alerts focused on one stock. It's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. You make the trades in your own platform, discovered how an experienced hedge fund manager finds and exploits the best sweet spots in any markets. Okay, and I see the sales have already started coming through. Let me just take a look here. Okay, let me finish the webinar and then I'll start saying hello to the new subscribers. To make this even more enticing, if you buy now, you will instantly receive a trade alert with an extremely high probability of success. Right now, our success rate is 95%. The market is open. You can execute this now this second and make some of the most serious money in your life. Don't leave good money on the table. So 6 months for just 997. Chat box is on the right, and we've almost used up the 25 allocation. So if you're sitting on the fence, move now before the sales cut off.
Leave you. Thanks, Anna. Okay, thanks everybody, and thank you, John, for the good laugh. And you know, he said he was on the Orient Express. I actually, for my 60th birthday, I did go on the Orient Express myself, and they have actually a grand piano on the train, and I sang a couple of songs with the piano player. It was a fulfillment of a dream that I had. So John is right that if you can get this right with trading, you can do some of the things that you've always wanted to do. But you know, trading, people have different dreams. Some people just want a little bit of an income. Some people want a more substantial result. But whatever you want, you probably have a guru that doesn't seem to care, in my opinion, to some degree. And I'm not saying it's all of them, but I will tell you that the title of this presentation is really meant to just take the wool off your eyes, whatever they say, pull back the Wizard of Oz curtain, and tell you the way the business of investing and especially day trading really operates. So my question to you is, does your guru really care if you win or lose? So let's get into it. If you don't know who I am, I'm the guy that is on the other side of where to buy and where to sell. Guys like John and others, they use me to complement what they do. I'm about helping the trader as a human being to understand their capabilities as far as trading is concerned, the importance of things like patience and pulling the trigger without hesitation. I'm about the trading discipline and having you come out of your own bad habits and making them good habits. I worked for Payne Weber for several years until they wanted me to sell mutual funds. I was a commodity specialist for them. And they were just too conservative a firm for me. That was in the late 80s. During the 80s, though, most of those years, about 8 years, I ran a company called, I was a regional vice president for the International Trading Group, very large options firm. I also, I left that option firm. I left Payne Weber to start my own management company, where I managed as a commodity trading advisor through the Hallett Group. Used my own name, and I've cleared through my own introducing broker, so that I was making money by the profitability and clearing trades and so on. But really, my claim to fame have been my 4-minute drill for traders. That there are several hundred of them out there, and where I help to encourage traders to focus on what's important in trading. I'm going to go through that right now, but I want to know if you believe that it's true that 90% of traders lose money. And when I say traders, I mean stock traders, futures traders, Forex and options traders. Do you, in the chat, can you, just to give me a test in the chat, or that's probably the best way to do it. See if I can open the chat. Do you believe it's true that 90% lose money? Anybody? Just give me a, I see it, we're doing the questions. So no, I see a yes, I see a no, I see a yes, I see mostly yeses and a couple of no's. Okay, I'm going to show you that that it's true, and I'm going to show you why it's true. There are 4 studies that I look at. If you look through the internet and you try to ascertain and you look for studies done on the profitability of day traders, you're not, it's going to take you, it took me 5 hours to come up with these 4 studies. There were several other ones that were inadmissible for several reasons. they only had 5 people in the study, or they only, you know, but these were substantial studies done by substantial organizations. The North American Securities Administration Association, 100 years ago, they started in 1919, so it's 102 years now. Small group of state security regulators had a big idea: form a network of colleagues to work together for the protection of investors through North America. Okay, U.S., Canada, Mexico, all together forming the North America Security Administration. Then there's a European group study that I found it's an independent European Union authority that contributes to safeguarding the stability of EU's financial system by enhancing the protection of investors to promote stable and orderly financial markets. So here are watchdogs for us, the day trader. And here's I took this particular one. It's a specific country, Spain, that their National Security Market Commission actually reviewed what was going on with day traders and made a particular law based on that. And I'm going to show you that. And then there's the Brazilian Stock Exchange. This one, I bring this up because this is the one that's talked about a lot. They have pretty extreme results in their study. But these people, Ferdinand, Rodrigo, Bruno, these are all top traders in the country, very well respected guys. So I want to show you that quickly too. And I'm going to do this very quickly. You can look these up on your own and lay it out. Some of these are 20 pages long. One of them was 11 pages long. And so you can, I'm just going to give you the highlights, okay? This is the North American study. And as you can see, this was done in 1999. So when I showed this one to my wife, she said, well, that was done so long ago. Well, still traders, still day traders, and so on. And this is probably the most extensive study at all. They found that 70% of traders lose money, and only 11.5% might profitably trade. They weren't even sure. Well, what about the difference between 70 and what about that other 15 or 16? What happened to them? Well, they're kind of the break-even people, the people who wasted a lot of energy, I guess, and got nowhere. But 11. So if I take this number, 11.5% might profitably trade. It says here, concluded 70% of public traders will not only lose, but will almost certainly lose everything that they invest. Now, this is the experience many of you had listening to this presentation. Only 11.5 of the sampled evidence the ability to conduct profitable short-term trading. Okay, this is the study from. This is a chart from the study in Europe, and I'm just taking you to the pictorial. This is a little bit more recently, about 3 years ago. They took various entities in Europe, and here's one where a third of the people actually made money according to them. And you can see that down here is a quarter, but this is only half the chart. Here's the other half of the chart, where you see that here we have 86% losing. Anyway, the average of all of these trading firms, of what they were willing to show them, and this was another thing that you'll see through a lot of places refused to show them the evidence. There was no law that they had to turn over. This was on a voluntary basis. In any event, 76%, largely voluntary, 76.3% were losers in this particular study. This one, the Spanish National Security Marketing Commission, first of all, when they studied the results of day traders, the first thing they did was ban binary options. The second thing, and this was more recently, two years ago, when they talk about financial contracts for difference, that means anything that's settled, and anything that we're talking about here, a forex contract, futures contract, stock, anything you buy and sell and it's settled at the end of the day is a financial contract for difference, for differences. And so they wound up requiring anybody that advertises for day trading to state between 74 and 89% of retail investor accounts lose money when trading. Okay, and if you want to abbreviate it a little bit more, they'll allow you to do that, but you still need this sentence, and not only the sentence, but in bold. Okay, and so this is now we're getting even closer to 74 to 89%. I think you can probably believe more toward the 89%. And here's the study from Brazil. This study showed that 97% of all investors who persisted for more than 300 days lost money. Only 1.1% earned more than Brazilian minimum wage, and only 0.5% earned more than the initial salary of a bank teller, and all at the time with great risk. I talk about opportunity value. If you're not making money, if you've traded all this time and you're break even, you probably could have been doing something better with your time, unless you enjoy it, like watching a movie or something, unless you're getting great enjoyment out of it. But usually you get great frustration out of what I just, the history I just described. In any event, Brazil is a kind of a wild place. It's known for pretty speculative things going on. You can see how they handled COVID and so on. I mean, it's a kind of a crazy place. So this particular study may not have been taken as seriously as the other, but I do, because the individuals that ran this study, so some of the top people in the industry in South America, this was a study. I want to show you this. This is a graph from the study. They started with 19,636 people, but they reduced it to 1,551 people who actually had their accounts equal or over 300 days. And now only 3% of those people trading 300 days or more were profitable. So there were 47 traders, okay, out of the lot. And here's the display. Let me just, this is the net profit, daily net profit. And don't worry about this axis is the daily net profit standard deviation. Don't worry about that right now, but just understand that of the people that made money, here's how much money they made. And you can see that most of these 47 people who made money just made very little money, very little money. In fact, this is the minimum wage. Most of them made less than the minimum wage. Brazil and some additional people made less than $50 a day. Looks like $20 and $30 a day, less than a bank teller makes. Of those that are profitable. And these people were either professionals who moved to Brazil, I guess, or they're just plain lucky. But I just wanted to show you this particular chart because out of 47 day traders, 3% of the 1,551 day traders who obtained a positive net profit. And so 90%, as far as I'm concerned, from what I have discovered in my decades of helping traders, is an accurate figure. Okay, so most people know that most traders lose, whether you believe it was 80, whether you believe my proof that it is 90 and what you've all imagined. I've just shown it to you through studies. So my question to you is, why is trading so popular? So let me go back to the chat and just give me a word or two on why you think trading is so popular. Okay, and I'm just going to take a look at some dreams being, yes. Greed is another one. Appears easy from the outside. Very excellent comment. I know I sound like one of those guys from Saturday Night Live. Well, you're getting the idea. All right. Let me tell you what I've come up with from my experience, and my experience is based on what you, the same people that you are, day traders that are answering the question, why is it so popular? And the first reason is there's very little regulation when it comes to advertising. Remember when I told you I ran a very large organization as a regional vice president for an options firm, and the attorney's office for all the offices was with 15 offices in this firm, and it was right next door to me. So I was very friendly with and I could see them going over what was allowed and what isn't. It's amazing the width of the expanse. They'll let you, as long as you use words like this can be yours, or phrases like it's possible to triple your money in 2 weeks. Sure, it's possible to triple your money in 2 weeks, but is it reality? Plus, if you put a boilerplate disclaimer somewhere on your ad like trading futures is risky and only risk capital should be used, or past performance is not indicative of future results, only risk capital should be. I mean, the words come out of my mouth because I've written it and put it in any ads that I've run or advised other firms to run in the past. And it's really, in fact, it's just now, at least it needs to be in the same degree of type and boldness as the general ad is, but it's still at the bottom, and it's still, everybody uses the same word, so it's largely ignored. So you can pretty much say anything, okay? You're good, right? As long as you use can and not will, and it's possible to instead of you will do this, as long as you shade it a little bit, you're good, okay? As long as there's a semblance of truth, it's okay to advertise. And if you put the boilerplate, you're good, okay? Just like any business, we look for great copywriters to craft the message that the customer really wants. They use words like huge gains, faster profits, easy to do, just follow my leads. The greed that somebody mentioned, somebody in the chat, that's so true. It hits the greed button, someone just like you. And my favorite is where they lead you from a psychological basis, like Tony Robbins would do. Just imagine yourself on a boat on a river with tangerine trees and marmalade skies. I guess you know I like the Beatles. So can you see yourself, you know, providing your college fund for your children and their children after that, and relieving a legacy? Can you see yourself just close? You know, this is advertising at its best. They keep the dream alive, okay? A combination of unlimited promises and limited mention of risk equals the answer to your dreams, okay? But look, advertising is advertising, and I get it. I mean, I've all the supplements and out there and over-the-counter stuff that's supposed to cure everything. Most of them never seem to work for me, but you know, advertising is advertising. I get it. It's allowed. It's kind of a buyer beware world, is what I'm saying to you. Okay. So what's reason 2? You got that one down. Okay. It's advertising is getting you. The trading system or the trading plan that you're using doesn't match you as a trader. Okay. And I'm going to give you a background. Firms that sell trading systems and trading plans are good. They're good at one thing: educating you on running their particular system, the way they do, the way they like to see you trade, what they're teaching you. Let's call these people gurus. Okay. They don't know you. They don't know your personal strengths. They don't know your weaknesses. They don't know your history, and if their plan is right for you. So for them, it's one size fits all. And the truth is, every trader is a little bit different. I coach them. I've been with them. I've done it in groups. I've done it. We do it one-on-one. Every trader is a little bit different, and the trading plan needs to match that particular trader. There's no other way. Now, the book that I showed you that I wrote on trading plans, I think it's still available. I read several of them, but the latest one is still available on Amazon. And it's the first third of the book talked about matching yourself to your trading plan. A slightly ADD trader who lacks patience should likely not be trading a plan that requires waiting for certain criteria to fall into place. He or she may be better off with a plan that has frequent signals. I mean, you're not going to sit there. You're the kind of person, an ADD person with the wrong trading plan is the kind of person that's going to sit there and jump to moving averages that are about to cross. You say to yourself, why can't I get in now? It's obviously going, the 50 is obviously going to cross the 200. I'm going to get the death cross. Why don't I just do it now instead of waiting? It's obviously heading that way. I can lower my risk, and I can by using the same stop, and I'm going to increase my profit by getting in earlier. And so this is the way the guy or gal that needs the action thinks. Okay, it's not the right plan for you, because I can tell you many times those averages are not going to cross. Okay, and you're going to get hurt. A trader who is a person who usually is cautious, who best be served by a trading system that has several confirming hoops to jump before. They're not ready to just jump on one or two trends. They need to see the moving average happen. They need to see the volume, give them enough volume so that there's meaning behind the trade. They want to see where the big money is going. They want to make sure that the longer term chart is also in the same direction, so that they're going with the undertow of the flow. This is what a cautious type of an accountant type of a trader, person who is trading on the side as an accountant, wants it. You got to know who you are and match yourself with the right trading plan. A trader whose father was a gambler and saw his family finances obliterated may be best served by a trading plan that keeps the trading losses to a maximum of 1% per trade. You hear about 2% per trade. I talk about it all the time. No more than 3% of your equity per trade. But if you're a person who has an inner emotion or background that saw some sort of destruction like I've just described here, there are plenty of trading plans that limit each trade's loss to 1%. This is the kind of trading plan that fits that kind of person, because unless you can follow your trading plan, you're nowhere. Okay, the truth is there's no one-size-fits-all trading plan. So I show you the fact that you're being bombarded with all the good stuff about trading and none of the bad stuff, okay, and none of the risk. And I think I've shown you here that in order to succeed as a trader, and the reason why a lot of traders hop from trading plan to trading plan is because they're not finding it, they're listening to the hype, and they're not taking the time to match who they are with their trading plan. Now, the counter argument is, hey, if it's not the right plan for you, we'll give you a guarantee. Well, that's crazy, because although that's a good thing, most traders will not take advantage of the guarantee, even though they're not profitable. They'll keep trying because others are having success. Yeah, well, this person just made 20 times his money. Why can't it be me? I must be doing something wrong. Let me try it again. And because of the mismatch, it's never going to work for you, but you stay with it. You go past the guarantee period. How many guarantees? I'm asking you the question, but I'm a little short in time, so I'm not going to check. I know the answer to this. How many guarantees have you taken? Most of you are going to say 0. A few of you will say 1, and I'm not saying I don't want to listen to you. It's just that we're a little pressed for time here, trying to help Anna and the speakers. There's some great speakers here, so trying to keep this in my time frame. Those in the industry know that. They know this. They know that the guarantee is not going to be utilized and have accepted a refund rate of around 15%. When a trader success rate of 10%, which means that a trader's next move, let me make it English. Listen, they're willing to. We in the business of selling you stuff. We are willing to accept the 15% refund rate. And that's okay. Then we know we have because we have valuable things to show you. They have valuable content. They work, but because of the mismatch, you're going to get 15%. But there's a lot more mismatch going on there, and the difference between the 10% success rate and the 15%, that 75% in the middle are just people that are going to keep hopping from trading plan to trading plan. Again, it's up to the trader to see the game that they're in and inspect more carefully the kind of trading plan that they're going to be committing to. Okay, reason 3. The industry is complicit in the hopping game. We've already established that the vast majority of traders lose. Okay, this is true no matter how good the trading system is. Most of the trading systems you're being sold by responsible gurus are good trading systems. They'll work, okay, but you're still losing. 90% of traders are losing because there are 2 necessary components to winning trading, to winning trading, and that is a valid trading plan, which reputable gurus do supply, and the ability of the trader mentally and emotionally to follow said plan, which they do not supply. Okay, gurus are good at teaching you how to run their trading plans and trading systems, period. Although responsible firms will give a mention of the importance of the mental and emotional control management to successful trading via articles, videos, they'll write, even recommend a book on it. But that doesn't do anything. That doesn't help you in that area. That's not enough to turn the destructive trading behavior to supportive trading behavior. It's not their field of expertise. And so the losing continues. The hopping from trading plan to trading plan continues as you're seeking the perfect trading plan. And likely the majority of trading plans that you've tried either didn't fit you or may have fit you, but you had some mental and emotional capabilities that weren't brought out and some behaviors that were hurting you, and therefore you continue to lose and you just hop to the next trading plan. This is the worst part. Rather than encouraging traders to do the inner work, again, which to the guru's defense, most traders don't want to hear about it. Traders don't like to know that they're their own problem, and they are likely the reason that they're not winning. Okay, nobody wants to hear. I'd rather blame the guru or blame the market or whatever. It's okay. It's human nature. Okay, it's not the guru's expertise. So the guru doesn't want to tell you something you don't want to hear, and it's not their expertise. So they'll recommend a book or write an article about it, but it's not helping you. And here's what's happening: when a trader loses, and 90% will lose, they will look for another holy grail because of the bombardment of the advertising. It keeps their dream alive. Gurus know this and understand this, and it can lead to cross-promoting. You wonder why one Forex trader advertising another Forex trader's stuff. I mean, what is his stuff no good? They know that you're likely to lose on their trading plan or trading system, and when they recommend somebody else, they're going to get a commission for referring you, so they get another stream of income. Look, it's a business. It's a business, and they put out some good stuff for you because they know it'll work if you can follow it, but you can't follow it because it either doesn't fit you or you're not controlling your mental and emotional game, and that's okay because you don't want to hear about it anyway, and you don't want to blame yourself, so you continue to hop from trading plan to trading plan, looking for the answers and blaming everything outside. Okay, so gurus, they understand this, and it leads to the cross-promoting. So for those who don't buy their system, many of the girls will promote other guru systems and grab a commission for the referral of their sale. And there's nothing wrong with that, except it does not serve the trader. Okay, the trader keeps hopping from trading system to trading system and never really gets it. And the missing piece is the self-analysis, self-correction piece. He or she continues to be drawn into the next promise of riches and buying. Okay, so I want to show you this. This real quick is actually I took several surveys of my trading clients and trading prospects. I took a small group each one. This is actually the smaller group. I did this 4 or 5 times over the years, and they each come out with the same percentages. I'm showing you the smallest one because I used to use one firm for doing these surveys, and I'm on to another firm. Anyway, this is the results that's common. I asked, how many trading courses have you purchased that included a trading system or trading plan or taught you where to buy and sell? Okay, how many trading plans have you gone through? Okay, and going to another one. 1, 2, 3, 70%. Look at this. Over 40% have gone to honor in the 5th or more trading plan. They've blown out accounts and they keep going. 70% have 3 or more trading plans. The industry has you hopping from trading plan to trading center. So if you think about it, a trader who finds his or her way to profitability is making money and is content and stops buying. So in the end, it serves the industry that you don't win, and you keep hopping from trading system to trading system, and you keep buying. I'm not saying it's the industry is created to do that, but the industry has evolved itself to do that because people don't want to hear that they could use some self-improvement. And so the industry allows them to continue to operate under that falsity that they should look into what's between the ears. And so it serves the industry that you don't win and that you keep hopping and keep buying. It's like I get pissed every time I have to buy a new 14 razor blades for $40, and I say, God, they got to have a blade that can last more than 3 shaves. But it's like a replacement business. So let me be clear. I'm not saying that gurus don't want you to win. I know 100 of them personally, hundreds, and I can safely say they do want you to win. They do want you to win. They want the testimonials. They do want you to win. But the industry is not set up like that because the industry de-emphasizes the requirement of mental and emotional management to succeed. It's the trader who doesn't want to face the truth. So why should the guru emphasize it? So where does all of this lead us? Here's what we know. We know the industry is set up to make you keep buying trading systems and trading plans, but it's not set up to actually have you win. 10% of traders make money. That's it. And here's what you may not know, but I know. Only 10% of traders do anything at all to improve their mental focus and emotional control, to bring out their mental and emotional capabilities. They're inside you. You need to replace the ones that you have that work for you and put them in place of ones that don't work for you. And the truth is that one statistic, 90% of traders do nothing, okay, about their mental and emotional capacity. And that's directly responsible for the other statistic that 90% traders. I mean, if you can't see that with this presentation, you'll just keep hopping from trading plan to trading plan. So the bottom line is the ball is now in your court. If you're ever going to put the odds of winning in your favor, you'll need to include a process of managing your mental and emotional capabilities. And that's not hard. In fact, if you allow me to personally guide you, it will be likely the most enjoyable part of your trading life. It's easy and it's actually fun, but you've got to take 7 or 8 minutes a day to do it. It's all it takes. Except it's fun, maybe the most enjoyable, except for, of course, making the money. But at first, I want to do another proof here. And in order for you to believe what you're saying, I got about 15 minutes here. I'm just going to show you proof of the scientific proof of what we do and how we do it. Okay. What is your primary thought or emotion that you trade with that has you trade in a way that compromises or hampers your trading success? What are you doing that's getting in the way mentally and emotionally of your trading success? What is, you keep making a mistake. What's causing it? Tell me the chat. Where are you with that? Just looking. Fear. I mean, what's getting in your way? Greed and fear. We heard all. We got a lot of that. Okay, let me get into it with you. Okay, here are the top responses. Fear of losing. Okay, causes hesitation. Fear of missing out on a profit. They call it FOMO. I guess they got a word for it now. Causes you to enter before completing. Before the confirmation is complete of a trade. Chasing trades, okay, increases the original risk parameters. And you know what chasing trades is. You know, you buy it too high and your stop's in the same place, that's increasing your risk and your potential is less. Fear of a profit turning into a loss. This is the bane of a swing trader. And of course, the fear of not being right, mixing your ego with trading, lack of patience. We've talked about that. Greed, had 3 or 4 mentions, another one just now. Increase my exposure when I'm winning. Revenge trading, I fear I'm not good enough as a trader to make it. That's what kind of starts to boil down to. You take a couple of months off and then you go buy another trading plan, okay? Thoughts and emotions are married, okay? You clear the fear, and you clear the fear. So step 1 is clearing the fear, okay? Thought, when you have a thought, the stronger the thought, the stronger the emotion, okay? If you have a thought of fear of pulling the trigger because you've lost 4 or 5 trades in a row, or 3 or 4, and you don't trust your trading plan now, all of a sudden, the stronger that thought is, the stronger the emotion is going to be. And conversely, the stronger the emotion, the stronger the thought. When you separate the thought from the emotion, both will dissipate. In other words, and there's a way to do that, and it's called EFT, Emotional Freedom Technique. Won't go through what it is except for to look it up. Emotional Freedom Technique. It's a combination of Eastern and Western science. It separates separating the thought from emotion. And the Western science is when you're speaking certain things. I understand that I'm fearful of. First, you admit it. I understand. I'm fearful of pulling the trigger because I'm afraid I have a fear of losing because I've lost a few times recently. As you're doing this, you're tapping meridians, these points in a certain sequence, and then you're reversing what you're saying into, I understand that losing is part of winning. I'm a wise and disciplined trader. I do the things that a wise and disciplined trader does. When you say certain things in a Western psychological philosophy and tap these meridian points where thoughts are energy, it works. And rather than getting too deep into the weeds on this, I just want to show you real quickly. This is something from the General Psychology Review, one of the main periodicals of the psychological industry, and they used 18 randomized controlled trials. They started with 51 and decided on the 18 most responsible. But look right here. It says here, I'm going to read this. Criteria for evidence-based treatments proposed by Division 12 of the American Psychological Association were also applied and found to be met for a number of conditions, including post-traumatic stress disorder and depression. EFT, or they call it acupoint stimulation, they call it energy psychology, they call it, but the official name is emotional freedom technique. It is the go-to therapy now for post-traumatic stress disorder. So if it can separate the thought from emotions for the veterans, believe me, it works like a charm on traders. Okay. The conclusion was that a review of the current evidence use of acupoint stimulation in treating psychological disorders has been examined in a number of studies. Studies have consistently demonstrated strong effect sizes and in a quicker time period. I won't read all of this, but favorable outcome in research. And this, of course, is from the periodical I showed you. This is from another. This is a Morgan Clun. This is a study that was done, again, for another periodical. I'll show you the name of it in a second. He wrote a paper on just this. And let me see if I can find a number here. It's 658 people in the study. 14 studies he accumulated it for this abstract, for this study, and 658 individuals here. And I'll get to here's the name of this, the Journal of Nervous and Mental Disease. I'm sure you all get a copy of that. And this is from 2016. The data demonstrates that EFT, emotional freedom technique therapy, as associated with the significant treatment effect when patients are compared with the baseline and compared with control conditions. There's insufficient data to demonstrate equivalence or superiority to traditional psychotherapy such as CBT. However, because of its efficacy and ease of use, this happens quickly. We in one session on Zoom can turn around a particular field literally using EFT in one session, may possess significant practical advantages in public health and so on. So this is one of the therapies we use with you in our Zoom meeting. And in step 2 is once we separate the thought from emotion, we've got a clean slate to deal with. And then now we start using our subconscious trainings, which we are famous for, short meditations. These right here are neural pathways. These neural pathways create a neural net that hold your subconscious behavior. It's your conscious mind is what you hear all the time, but it's your subconscious mind that is causing you to act or not act. So if you're not pulling the trigger, you may be saying to yourself, I'm going to do it today, I'm going to do it today, I'm going to pull the trigger when I get the stimulus from my trading plan, but you're not doing it because your subconscious mind and this neural net is controlled. And in order to build these neural pathways, in order to create a neural net that serves you, you need to drop into an alpha brainwave state, a meditative state, and we show you how to do that, and this is what we're famous for. Okay, again, you're working with the conscious part of your mind as you're talking to yourself. It's the subconscious that makes all the difference. And I'm going to just let you know that all the important stuff, the decisions that you make, is happening in your subconscious mind. Programming your thoughts, the true genius, changing your thoughts and changing your life, all thoughts, feelings, all of this is happening in your subconscious mind. So there's our subconscious trainer, my wife. Look at how beautiful she is. Oh my God. And she is, this was only taken a few years ago. And I got lucky. She turned me around. This is how it all started 20 years ago. And she was watching me be crazy as a trader and running trading firms and so on and trading on the side. She slowed me down, had me start to meditate with these 7-minute training sessions, and the result is what you see today in me, and that's somebody who is a zealot in getting you to do the right thing and being part of that 10%. The industry is not going to help you. The industry is not going to tell you about it. They're not going to emphasize it. They'll mention it, but they're not going to. Tisha's written books, don't have time to. We've done myriads of software. She's on the cover of just about every psychological periodical. But for the last 10 years, 15 years now, she's been helping me, and we together are the disciplined trader. She's lectured in hundreds of, maybe 50 or 60 foreign capitals, as well as those in the United States. Okay, the solution is our laser coaching. Okay, and this is what I want you to consider. Okay, it's unlimited one-on-one coaching sessions. I'm going to do this in 3 minutes. Okay, and I'm going to pass it on to the next person, but I want you to take advantage of this. Unlimited coaching, one-on-one. Actually, it's two-on-one. Tish and I are on every call with you, and I want to hear how you trade. We're going to work on separating the thought from emotion. Unlimited number for a year. Unlimited coaching for a year. They're 15-minute coaching sessions. The first one is a little longer, sometimes as long as 30 minutes, an hour, because we want to get to know who you are, some of your challenges, and set up a capabilities profile. And then we work on, we go one at a time, and we just knock out each of the things that are hurting you, okay, the behaviors that are hurting you. 15 minutes, so we're emphasizing focus, isolating predominant behavioral issues to eliminate, and you'll have private emails access to us, okay? 1 full year of coaching means we recognize outside influences during the year can cause you new trading doubts and issues that can lead to costly trading. We're there for you. Sometimes I have somebody that's just finishing their year with us this month, and he just renewed. Even though he hasn't made a session with us in the last 2 months, he just likes to have us there when we need them. We're there we will be there for any and all issues that may arise. We're going to use these techniques one-on-one with you so that you can become part of that 10%. Delivered to you on our online meeting, Zoom, okay? There's one picture with Tisha helping Chris tap. The laser coaching process gives you fast results for your most pressing issues first, leaving plenty of time to work with on other issues that are holding you back while developing positive habits to replace the former destructive habits, okay? And you'll get the recording of every session we make. And we use, again, I didn't get a chance to talk about thought-filled therapy. I've talked about subconscious training and emotional freedom. We've got a lot in our toolbox to help you. And that's why we're the only ones doing it. And that's because nobody has the expertise that we have. Nobody does what we do. Nobody does unlimited 15-minute coaching sessions for a year, okay? That's what you get. You get, after each session, you'll get the recording. You'll take your session, you'll do when I say do your homework, we'll give you a meditation that we record for you, maybe privately or one that's in our stock closet, and we'll ask you to take it once a day for a week. So you'll do that. Once you do that, you can make another session if you want. Okay, so you book as many sessions as you want, whenever you want. And again, like I said, the first 30 minutes. Here's MJ, who said some great things about us. We have the tools and experience and wisdom. Listen, I can show you a lot of these. We've been doing it for a long time, but the most important part is that if this works for you, if what I'm saying to you sounds like it's meant to be. This is a video I was going to show you that sings our praises. Here's the here's the no risk guarantee. If after the first 30-minute coaching session, the first session, 30 minutes, you don't believe that this program is for you, we'll happily and immediately refund your money. We're going to give you the discipline. This is bonuses. I'm not going to say forget about the bonuses because they're great. Listen, we want to turn you into that 10%. I've just shown you why you need to have this done. Okay, Discipline Trader Mastery Program. This is what we're famous for. I'm going to give you some simple trading plans. If you don't already have a trading plan, it's another bonus I'd like you to have. These trading plans fit on one piece of paper. Also giving you these, you have access to these EFT sessions, these stock EFT sessions that turn exercising patience, coping with loss, etc. I'm not going to show you what clients are saying again. They're all good stuff, but I'm talking to you. You need to have the good stuff. I will say that this person did mention here at the end that one of the things we did for him is disassociate emotion from trading and unexpectedly decide what trade. This guy was trading, JC was trading a trading plan that didn't fit him. It was obvious from the beginning. So, and we were able to actually take the trading plan he's using and adjusting a little bit, and now he's on his way. So here's the offer. You get the 15 minutes of coaching, okay, as many times as you want for a year, access to the mastery program, all the trading plans, and the EFT trading. It's just, and these are real values. If I had a little longer time, I'd tell you why. But this is the price for you, and I have 3 spots right now. $19.97. There is the link, and Anna will put the link in the chat box. thedisciplinetrader.com/laser. Okay, thedisciplinetrader.com/laser. it's an investment really of $167 a month. I could have said $8 a day or a cup of coffee, but if you're not winning, I'm just showing you that traders, this is the missing element. And then the industry is not going to tell you. They want you to keep buying. 4 traders just finished their year of laser coaching with us in June. 1 is renewing. I mentioned this. Paul's renewing. So there are 3 spots that are open in this deal. Okay. If you want, this is a $5,000 product. Okay. This time next year, it will be between $5,000 and $8,000. Okay. You're going to land on this page. Here's where you'll be when you click on the link. If this page doesn't come up, this page will. It means that those 3 spots are taken. Just get on the waiting list. I'll put you in order of you receiving it. So if this doesn't come up, this will get on the wait list. Okay. Again, you got the guarantee. If after the first session, we'll immediately, we don't resell you. You'll know if it fits. Believe me, it's going to fit. And the first 3 spots, if you do it by the end of this presentation, I'll give you a half hour after the last presentation. I'm also going to send you one of our leather-bound journals. Okay. Again, there is the link. There is the unbelievable investment for you, the low investment for you. I love to see you. Love to be able to help you. Tish and I are here for you.
Again, my name is Ray Burchett. I've been doing this as a trainer since 1997, when I co-founded Local Knowledge. We started helping traders develop online for that e-mini environment. And it all got started because we recognized just a great need for traders to understand how fast things move in the trading environment. It's not like that all the time, but when you have the greatest opportunity and risk, you really have to operate at a much higher level in getting through information. So that's how this all started. And again, I started trading in '83. I was in the pit till 2004. And this program has been going to traders since 2009, and now it's branched off into something else for non-trading professionals. But I just want to introduce myself, and I'm going to kill the camera, and we're going to get started. And I really appreciate everyone being here. So just to make the CFTC happy, trading futures, options on futures, and Forex off-exchange transactions involve substantial risk for loss, not suitable for all investors. Past performance not indicative of future results. And you guys know the drill. That's the short version. So I'm really excited about what we're going to talk about today. It's psychological operations, and it's just filling up our brain with fog and trash and distraction. And most people are familiar with it, but we certainly don't appreciate the drain on our energy and the consequences on our trading performance. So Psy-Ops are engineered to control our beliefs, shape our beliefs to control our behavior. And once we understand just how prevalent this is in all aspects of our life and learn how to neutralize it, things change quickly. We get much greater awareness to quantify, qualify the market, go through execution, all the things that we have to do as a trader. And bottom line, Psy-Ops are becoming more and more prevalent, and they just block our potential. You know, we can look back over the last year, and there's 2 huge ones that have been out there with tremendous amount of false messaging, false narratives, and that's both COVID and most recently critical race theory. Now, you all have your own beliefs about it, and that's the way it should be. But if you take a look at the one-way communication of those, in other words, there's no objectivity, and anyone that wants to question, have a conversation, they get censored, they get deplatformed. You don't see the other side of the argument put forth in the aligned media. And it's just a one-way communication. And as traders, we pride ourselves in our objectivity. We understand that we can't be one way, or we're not going to be able to discern risk. We're going to miss out on opportunity. Or even if we don't only want to, let's say, even if we only want to trade from one side of the market, we still have to have the awareness for when we can't trade from the other side of the market. In other words, we're built on objectivity, and these psychological operations go against objectivity. And that's why they're so destructive to a trader's energy level, because they're counter to our logic. And so what these psychological operations are doing are really destroying our historical knowledge, which our foundational beliefs, our conviction are built on. And again, as traders, we're successful because we can draw straight lines to cause and effect. If someone asked you, well, take me through how you quantify the market, you could do that. You could draw straight lines to why your process is what it is. Same thing for qualifying, same thing for execution. And if you can't do that, then you have trouble as a trader. And so that's what we try to do when we see these things in the news. We try to draw straight lines, understand risk and treatment for COVID. And it was really tough to do, mask or no mask, 2 weeks to stop the spread, slow the curve, however you want to go back to it. But then that just kept expanding. And that's really confusing. They had docs on the front line getting shut down for talking about hydroxychloroquine taken early on. And some lost their jobs. Well, now we're finding out it had the most efficacy. And we just, you could go back to last summer, the peaceful protests that were rioting, looting, and burning. Can't make sense out of that. We're told Antifa is an imagination, that it doesn't exist. And then we had all the confusion around the election that continues today. And again, we're logical people as traders. We're accountable. We have to draw straight lines. And it's maddening when we don't see that being done. And I know a bunch of you are saying, well, of course, we know these things, we're preaching to the choir. But my point is, we don't understand how much it's draining our energy and the consequences of that. And so, again, we have to understand how to neutralize this to get to our potential. So Psy-Ops have a long history, first used by military to prep the battlefield, if you will, then by governments to control civilian population. You want to understand why the Nazi Party was so successful, came into power? They were masters at propaganda. It's used by communist countries, used by corporations, used in education. Great example of education is the global warming fraud that got exposed when they got caught cooking the books, manipulating the data. And they had to rebrand it as climate change. So their objective is to create these narratives that are just close enough to the truth that we have to stop and question ourselves. And the more we try to follow the logic, the more frustrated we get, because we know we're being responsible, we know we're intelligent, we know we're capable of working through, and we end up becoming disorientated, confused, overwhelmed. Sets us up to be deceived, manipulated, and exploited. They take our control. And that's what's happening. So they impact us across the full spectrum of our life experience, creating stress by blurring the truth. And you may think that you could silo off these things into other things that aren't going to bother you as a trader. But understand that energy is directly proportional to anxiety. In other words, when anxiety rises, energy falls. Energy rises, anxiety falls. And so it's proportional. So to think that if you have anxiety in one part of your life, it's not going to impact trading, you're fooling yourself. So this ends up draining our energy. We can't develop the awareness to make good decisions. As a trader, that awareness is staying ahead of price movement. I'm going to get that into some specific terms. But we need to understand that cause and effect ripples through everything. And the more that we're distracted, the more that we can't think independently, the less control we have, the less independent we are. And that's what Psy-Ops want to do. They want to control us. They want to take away our freedom. They do that by confusing us so we can't think independently. And go back to the COVID, the early months of it, and we were separated. Worked from home, learned from home, closed down the restaurants, the bars, the gyms, the barber shops, the beauty salons. Weren't getting together with families to celebrate birthdays, weddings, graduations, baptisms, funerals. You know, think about how many people, the elderly, left this world without the comfort of their loved ones. When you have time, do a little research on suicide rates, especially for teenage girls. Gone through the roof. The cultural consequences of COVID are not being discussed. And the reason they're not being discussed is because if you were to examine risk and treatment, there's no justification for what was going on. So, but when good is together, when we're communicating, we can discuss our historical knowledge, that foundation for our beliefs, our conviction. We reinforce each other. We better understand it. We develop stronger conviction. And we put ourselves that much more out of reach of the folks that would look to deceive, manipulate, and exploit us for financial and political gain. So understand that good is empowerment. It strengthens others. Evil has to destroy, has to consume. At the end of the day, evil's going to lose. It's going to devour itself. And as ugly as this process plays out, the ability to empower trumps the ability to destroy. So how many times have you heard yourself say, you know, I knew it. I knew it. And you were mad because you didn't trust your gut, if you will, or your intuition. When it comes to good and evil, it's your gut. When it comes to functional things that would work logic through, that's our intuitiveness, our collective skill, knowledge, and experience. I'll talk more about that in a minute. Or consider how much time and effort you've wasted attempted to follow twisted logic, or how often you've been angered by elected officials who refuse to engage in honest debate. I want you to think about the folks that that you have respect for, and what happens when you disagree with them. They usually get quiet. They look you in the eye. They're running an internal check to see if they misstated something, left something out. And then they engage with you. They want to work it out, get to the bottom of it. They understand there's always that opportunity to get to a deeper place of understanding. That's how we evolve. They don't dismiss you. They don't tell you you wouldn't understand. It's already been decided. It doesn't concern you. Or let's talk about it later, try to put you off. They certainly don't personally attack you. But that's what intelligent people do, genuine professionals. They engage in honest debate. And here's the thing that's most obvious, but nobody talks about. As change keeps accelerating, more information and events, right? That's what's driving the acceleration. Advancing technology generates more information and events. That's what drives change. So we're going to have more gaps, more variables we couldn't account for because of that increased information and events. It's just a mathematical certainty. So guess what? The need to engage in honest debate, work things out, is going to become more and more frequent. And we're moving further and further away from it. And here we have these elected officials that we have put ourselves or trusted our well-being to them, and incredibly intelligent. Many of them are attorneys, lawyers, right? You understand all the education they have to go through. And we look at this and we think, my God, I can't follow the logic of these super intelligent people that are supposed to be acting in our best interest. So you have all of this going on, and it just builds and builds more and more trash in our brain, more anxiety, more frustration. And again, you may think you can block it off, have a silo for everything. It doesn't work. Anxiety up, energy down. And for trading, we have to have that superior awareness to stay ahead of price in those times of high volatility when we have the greatest opportunity and risk. When was the last time you saw objective reporting, both sides of an issue presented without bias? By any measure, censorship is going through the roof. There's multiple resources out there that you can research that can show the deplatforming of folks that are drawn straight lines to things that are counter to the narrative. And these are educated people. The most recent example, you had the frontline doctors that went to DC to say, hey, don't freak out over COVID. There's treatments like hydroxychloroquine that we have validated in our own practice that do a great job. If you're symptomatic early, get on hydroxychloroquine. They got destroyed. Doctors lost their jobs. One of them, a 20-year ER doc, for speaking out. Well, what are we finding out over the last couple of weeks? Hydroxychloroquine had more efficacy, more science than anything else at this outbreak. Another powerful example is because of COVID, we made all of these accommodations for the election, all the mail-in ballots, dramatically increasing the risk of election integrity. So the smart thing to do would have been to increase the controls to neutralize that increased risk. Well, that wasn't done. The controls were actually debilitated even more. So as a logical person, you look at this and it drives you nuts. And so these are common sense things. You know, we have some issues that really have us scratching our heads on the decisions that come out of Washington. And, you know I'm talking about some uncomfortable things, but these are having a direct impact on our performance and on our future. And so what Psy-Ops are doing is they're robbing us of the objective intelligence we need to get to the truth, to keep things sorted out, to improve fast enough to keep up with that ever increasing volume and speed of information and events. And unfortunately, many people have become so indifferent to the corruption, and it's on a scale that we can't imagine, that we just try and get by and figure we're helpless to do anything. So we want to have a high performance floor. By that I mean we have a consistent process for improvement and problem solving. That takes out the peaks and valleys. And that high performance floor generates positive energy, positive momentum. And that allows us to keep seeing and filling gaps, get ahead of them, keep elevating that performance floor to keep up with accelerating change. That's what we need to do. But again, when we're wasting all of this energy trying to sort through these false narratives, we're losing that high performance floor. We're losing the energy to have that consistent application of process for improvement and problem solving. So I could give you another example. We had Trading Goods this morning came out. They were looking for a deficit of 89 billion. That works out to over $1 trillion a year in trade, going out versus coming in. And a lot of that has to do with giving up energy independence. I mean, we're actually taking oil in from Iran now. Want to understand inflation? I mean, oil prices have more than doubled since the election. They were around $34 a barrel on November 4th. They were over $74 yesterday. You want to understand inflation, just look to energy prices. You know, Powell said in a speech, I don't know if it was yesterday or the day before, that, and this is after the Fed meeting last week, their announcement that they looked at inflation, even though it's running at 6% on the producer price side, that it's short term due to supply issues that'll work themselves out. And I'm reading this and I'm like, okay, part of that's all right, but the great follow-up question would have been, well, what are you going to do about it, energy supply? That's the biggest piece of inflation, and that's not going to go away. It's actually going to get worse. Policy of this administration is to eliminate coal. So the next crack of the whip is going to be at the thermostat. And to put that into perspective, again, the damage of these things, if you have a mom and dad working, maybe their combined income's around $70,000 a year and driving, their annual fuel cost to drive the car has gone from $1,500 up to $3,000 or $3,500 or more. So that's $1,500 to $2,000 lost in disposable income. That's a huge number for someone that's only making $70,000 a year combined. And many of us just, okay, got to pay more for gas, doesn't really affect us. We're not happy about it, but it makes a huge deal to these folks. How much food they're going to buy, if they can make the mortgage payment, or put money away to buy a house, send their kids to a faith-based school. Makes a huge difference. The health care they can buy if they're not covered by an employer. So these are all things that nobody talks about because we're getting all of this messaging one-sided that said, hey, it's not a problem. And if you think it's a problem, you're an idiot. Or worse, you're a conspiracist. So we have to have superior awareness to be effective as a trader. So superior awareness means we're projecting expectations tightly aligned with events as they occur. We see details in high def. We're able to make precise adjustments, securing outcomes desired. Think about the elite athlete after a game. They'll often comment on how they saw things in slow motion, had all the time to make the play. Well, that's because they projected expectations tightly aligned with events as they occur, saw details in high def, slow motion, had all the time to make the play, precise adjustments, securing outcomes desired. That's what we have to do as a trader. We have to be so squared away in our process that it's happening intuitively, unconsciously, like driving a car. That's high intuitive function. And there's a knowledge gap that keeps us from knowing how to develop that. I mean, we all have these thin moments where we experience peak performance, where everything comes together, and it's great, we kill it. And then we can't wait to do it again. And then we're frustrated because we put all this effort to have another peak performance experience, and we're not rewarded. And it's because we don't understand the beliefs and behaviors behind it. The intuitive development process supporting high intuitive function, which develops that superior awareness, optimizing the unconscious execution of tasks. And so I want you to think about when you've had a great day. You just went from one task to the next, or a great day trading. Just, you knew you made these trades, but you were just making them as part of your process, like driving a car. And it's because you had tremendous trust. Everything clicked. You were going from one thing to the next, no problem. But when we're having a bad day at trading or at work, it's because we can't connect the dots. We don't know who, what, and when to trust. We don't have that high awareness to sort it out. In other words, when we know the truth, we get through that analysis, decision, action cycle faster and faster. Each time we go through, we have higher awareness. And then it gets to superior awareness where we're staying ahead. And so Psy-Ops keep us from the truth. That's how they work. And they force our brain to just bounce all over the place like popcorn in a microwave, trying to figure things out because we can't discern the truth. And then we just give up. Do what we're told. The other thing I want to comment on, and this is very important, is the analog versus the digital world. When we're in the analog world, away from staring at a computer or our phone or a tablet or whatever, our full potential is accessible to us. In other words, we have the full spectrum of our brain, all of our senses in play. When we're focused in on a computer screen, the spectrum of our brain narrows. There's been studies in South Korea on this. If you want to search digital dementia, you'll get a pretty good idea. So when we're in that digital environment, closing down our brain spectrum, we're limiting our potential. And so what happens when we're trying to work through logic? We're online trying to find information and figure it out. We're spending more time in that digital environment closing down our potential. We need to change that. When we can't figure things out, grab a journal, collegiate notebook, composition book, put pen to paper. Start with your historical knowledge, the foundational beliefs that they validate. Those are the absolutes. You can draw straight lines to cause and effect. Now you can start breaking down that narrative that you're trying to sort out. And you can see in black and white where it's not connecting and why. And then you can have a conversation with somebody, face to face. Have body language as part of that conversation. We have our full potential available to us, all of our senses. We're going to be way more efficient. So anytime you have the opportunity to step away from the digital world, do it. And a great way to do that is keeping that composition book, that collegiate notebook, that journal with you at your trading desk. And there's other things that we teach in advanced training that ensure that you're in that analog world. But that's just one thing you can do right now. And when things come into your mind, write them down. Get away from the screen, write a sentence, write a paragraph. Before you know it, you'll be writing a page or two. And you'll have much greater clarity. You're going to have the full spectrum of your brain fired up when you go back into that digital world. So again, personal accountability is a cornerstone of trust. And trust can't exist without the truth. So how does Psy-Ops separate us from personal accountability? Well, through cultural messaging that says, hey, you're entitled to privilege without obligation. As soon as we believe we're entitled to something for nothing, we stop holding ourselves accountable for our work. We stop looking for gaps to fill. We stop developing or taking advantage of opportunity to develop deeper understanding for what we believe we know. All of those things expand our knowledge and competency, build and earn trust. Self-trust from doing that work, the trust of others by them observing us doing that work. All that goes out the window. If we believe we're not accountable, we don't have to do anything, we can just show up. Run our mouths, put our hands out, and bitch that much more if we don't get what we were supposed to get. Fortunately, most people don't fall into that trap. They know there's not something for nothing. Next message out there, moral relativism. Don't bother to judge. Anything can be justified. Well, the last time I checked, in return for the protections of the Constitution, we have the obligation of following the law, judging right from wrong, good from evil, whether our acts or the acts of others improve the human condition or corrupt it. If we don't do that, we have chaos. So we better judge, starting with ourselves. Then if we don't fall for that, the next thing is, hey, it's impolite to disagree. Political correctness. You know, you put those three things together, you get, I'm entitled to believe whatever I want, nobody can judge me. And if they do, they're impolite. Now, because they're impolite, I can personally attack them. That scenario plays out every day, all day. So instead of engaging in honest debate, you get garbage on top of garbage on top of garbage. More trash in the brain, more fog, more anxiety, less energy. And again, spilling into everything that we do. And the guys, gals that engineer Psy-Ops, they have deep understanding for the power and construction of trust. They know exactly how to push buttons. This is evil on steroids. They are knowingly depriving people of independent thought, of their life, of their freedom. So how are we going to neutralize them? Well, we have to have a better understanding of trust, power, and construction. And we go through the intuitive development process. That's what we teach in basic training. It develops a scientific understanding for how improvement and performance are best directed and supported. So what that basically means is when you look at your historical knowledge, the foundation for your beliefs, the conviction that they give you, now you have the framework to go through that process in a scientific way. And that lights up just so much more potential. Validates your good work. You're fighting the good fight. It shows you how much more you're capable of and how achievable it is. And so again, intuitive function is the unconscious execution of tasks. All professionals perform intuitively to some degree, unconsciously applying accumulated skill, knowledge, and experience. High intuitive function, the elite professional, has that superior awareness optimizing the unconscious execution of tasks. They're seeing and doing before others. They're best projecting expectations, most precise in making adjustments. And they do that because their focus is anticipating the needs of others. As a trader, our focus is staying ahead of price movement. And high intuitive function, superior awareness, is what allows us to do that most consistently. And we're lacking that knowledge because thought leaders in higher education, professional training, organizational development have overweighted functional instruction at the expense of the human potential. Decision makers in business have done the same thing by overvaluing technology. There's this massive gap that needs to be filled. But the powers that be that I fear evil is so great, they do everything they can so that gap can't be filled. They don't want you to have that knowledge because it would place your identity beyond their reach. You would see through these false narratives in a heartbeat. So I'm going to give you some tools so you can start doing that. And really the first is examine your historical knowledge, those absolute truths that are the foundation for your beliefs. Spend some time with them, strengthen that conviction, draw your straight lines. That's the best starting point. They want us to believe that we don't know anything, that we're crazy. No, they're the crazy ones because they can't draw the straight lines. Let's take critical race theory, just the name of it, theory. Where's the historical knowledge? Where's the foundation? Where are the straight lines? So we want to start with examining our historical knowledge, our conviction. Next thing we can do is look 180 degrees away from whatever the false narrative is. Some of you are probably doing this already. COVID didn't come from a lab in Wuhan. It did. Hydroxychloroquine will kill you, cause heart failure. Only in extreme circumstance where someone is already elderly, comorbidity, and they have heart issues. Very small percentage of the population. But again, look 180 degrees and you're going to be closer to the truth. So that gap that I'm talking about that is responsible for this increasing lag between machine advancement and human improvement, the accelerating separation between the haves and have-nots, is filled by the intuitive development process. Gaining that scientific understanding for how improvement and performance are best directed and supported. That knowledge empowers us to strengthen the behaviors, causing the brain to filter, process, and apply information most effectively. We see the false narratives coming. And I mean that with all sincerity. We can see what's happening culturally. And we can see that it doesn't fit with past narratives, so we can project what the next false narrative will be to try and take back control. We're ahead of the game. We're beyond their reach. We have high sensitivity for preparedness, precisely targeting our efforts. That superior awareness is optimizing the unconscious execution of tasks. And most important, brain function accelerates to keep up. In other words, this tremendous increase to information and events because of advancing technology is coming to overwhelm the unprepared. Again, a mathematical certainty. The human brain's the choke point. Massive increase to information and events. We need to increase our ability to filter, process, and apply it, or we're jammed up. That's happening. IoT, applying RFID technology. You know, in 2016, Cambridge Analytica pointed to 5,000 to 7,000 unique user data points on 84 million US voters. Those data points had basically started to accumulate after social media kicked in because of the smartphone. You can imagine how many they had in 2020. Well, with RFID technology, tracking our driving habits, our travel, our work performance, what we put in our shopping cart, they're going to draw 5,000 to 7,000 unique data points a day. That's going to put machine learning and artificial intelligence on steroids, harvesting, then using that data to profile and target. It's going to be a fire hose. And then you have all of the psychological operations creating garbage on top of that. And the censorship. So folks, I don't mean to have such a dark conversation, but that's reality. It's not unicorns and lollipops. We're at a very serious watershed in history when it comes to freedom and liberty. The power there is to manipulate and control in ways we can't imagine. And they want to go to a cryptocurrency for everything, because then they can just shut off the people that aren't going along to get along. So it's real important to understand that the brain's the only mechanism capable of integrating the mind, heart, and gut to know who, what, when to trust. The mind controls that analysis, decision, action cycle. The heart harmonizes the physical and spiritual worlds. And the gut connects us to instinct, those unconscious behaviors shared by a species necessary to its survival. Well, artificial intelligence can only replicate that analysis, decision, action cycle. It can't harmonize the physical and spiritual world, and it can't connect us to our primal instincts, ensuring our survival. So if you let AI in through a chip or nanotechnology, I'm pretty certain it's going to cut off the heart, cut off the gut to gain control. That's a pretty sobering thought. The other thing to understand is trust, not technology, again, determines how fast and well the brain works. As I said before, when we know who to trust, when we have great sensitivity for our preparedness and precisely targeted in our effort, we fly. When we don't, we're screwed. It's trust, not technology. And that trust erodes proportionately to increasing information and events. Not only are we getting it from advancing technology, but we're getting it from the false narratives draining our bandwidth trying to sort them out. So how do you fix this? Well, again, the 3 steps. Number 1, step back and really develop stronger conviction for your historical knowledge, the foundation of your beliefs. Step 2, look 180 degrees away from the false narrative. And step 3, complete my basic training. You'll learn how to develop and support high intuitive function. It'll organize your spaghetti bowl of accumulated skill, knowledge, and experience, your potential, turn it into a lightsaber, putting it at your fingertips, increasing the frequency of peak performance. And it's peak performance that accelerates improvement by accessing, realizing, and amplifying individual and collective potential. You'll have that superior awareness to stay ahead of price when volatility kicks in, giving us the greatest opportunity in creating the highest risk. This is the improvement acceleration loop. So again, high intuitive function develops the superior awareness that's optimizing the unconscious execution of tasks, peak performance. And that allows us to realize and amplify individual and collective potential. And when we do that, that's validating the beliefs and behaviors responsible for our success. That validation builds our conviction for who, what, when to trust. We have higher energy. We see the next opportunity sooner, make more out of it. We keep going through this improvement acceleration loop at a greater magnitude. And that's why basic training, teaching the intuitive development process, is so powerful. There's 2 phases. The first is 20 hours over 4 weeks. 6.5 hours of online instruction broken out into 18 on-demand learning modules, about 14 hours of homework. So 20 hours over 4 weeks, you learn how to take apart, rebuild, add horsepower to the cognitive engine, that scientific understanding for how improvement and performance are best directed and supported. Second part is 12 weeks, about 20 hours to complete a 90-day reflection cycle. It guides fine-tuning of that engine to your specific needs. Each week's like a chapter in a book, showing you how much more you're capable of, how achievable it is. Biggest challenge for a trader is to have that patience to wait for the market to align with their strategy and execute as intended. When we have scientific understanding for how we're making the most out of our talent, time, effort, and resources, we trust ourselves. That trust gives us the energy we need to patiently wait and the strong conviction to execute as intended. and embedding that improvement acceleration loop that ensures that we improve fast enough that we're not overwhelmed by this massive increased information and events, that our identities beyond the reach of all of these psychological operations wanting to control us, deprive us of our identity, our independence. So what I want you to do, and certainly respectfully requesting, go to trust1st.com and click on store and sign in, and you can get the full details for basic training. And I'm doing a live training where I'm going to condense that 40 hours down to 10 hours over 4 days, July 19th, Monday through Thursday from 2:30 to 5 p.m. You're still expected to do all of the other work, but for those of you who have an accountability issue, don't do too well scheduling things by yourself, here's a great chance to show up and be run through the training, 2.5 hours, 4 consecutive days, 10 hours total. And so that's included with the $697 cost. And that may seem like a lot of money. And I know in this day and age, any money can be a lot of money. But I promise you, it'll be the best money you ever spent. That'll make you significantly better at everything you do. Most importantly, it's going to secure your independence. You can use this coupon code, all caps, INVEXPO 200. And if Anna could put that up, INVEXPO 200, that'll take the cost down from $697 to $497. You still get to come to the live training, and that coupon expires midnight a week from today, next Thursday. So does anybody have any comments, questions? I know Kevin has put in a bunch here. And
Ray,
yes,
we have time for maybe one question, because in 4 minutes the GoToWebinar are going to be closed automatically. So
okay.
they
So-
all yours, but just to know.
I appreciate it. So I'm just looking through here. And Kevin, I appreciate your comments. If I'm reading them correctly, basically are taking responsibility, have done the research, understand the risks and the treatments evolved around them. And I just wish more people would have done it. And I've got 7 kids, and 5 of them are all in the workplace, and I'm doing everything I can to keep them independent of all the peer pressure out there for the vaccination. You can also go to the website if you have any questions, comments. You can schedule a time. We can have a 15-minute phone conversation. And I guess the last thing I want to say that I can't emphasize enough is that, if you feel like you've been beat up, you don't have the control to stand and fight against all of this, you do. And if we don't, we betray the legacy of freedom going back to 1620, 1622 when the Pilgrims first landed. You know how to fight. Look at your historical knowledge, the foundation for your beliefs. Look 180 degrees from the narrative. Come and join me on July 19th and really load up to win the battle. But we are at a massive tipping point when it comes to human freedom and liberties.